Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey everybody, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Guys, welcome. This is our live Tokyo session. We're going to go for 2+ hours from 9 to 11 p.m. Eastern. Welcome guys, thank you for joining me on this late night. Welcome everybody, welcome Val, Terrell, Megas White, good evening, good morning maybe for some of you guys. Welcome everybody, appreciate everybody joining, everyone on YouTube. Prashant, welcome bro, thank you for joining. Flyboy Kels, welcome bro, thank you for joining as well, appreciate you. I'm doing good, how are you doing? Welcome Josh, my man, Josh, hopefully you're in the gym right now, are you training? Welcome guys, welcome everyone. Pacific Life, welcome guys, hopefully you get some good learning out of today. Welcome Travis and Audu, welcome. Hello everyone. Thank you guys for joining. Okay, so the plan for today is we're going to go through the markets, okay, like we normally do, our daily routine. We'll go through any news on Forex Factory, what happened today, what we're looking forward to tomorrow and the rest of the week. We'll look at earnings really quick. We'll talk about overall, we'll do some top-down analysis. We'll see how the volume is moving tonight and moving into London and more importantly tomorrow FOMC. Okay, welcome everybody. Noor, welcome. Agent Smith Bradley, you passed a $250,000 challenge today. My man, respect. Good job. Congratulations. Unbelievable. Okay, that's a big accomplishment. Amazing. Congrats. Welcome, Sean. Thank you for joining. Okay, guys. Marcos, welcome all the way from Brazil. Man, I wish I was in Brazil right now. Enjoying some warm weather. It's getting cold over here. Okay, guys, so let's get into the markets. And you guys on Zoom, you guys let me know what you guys want me to chart for you guys. 100% we'll do gold tonight. So everybody on YouTube and Zoom will do gold, a nice thorough analysis on gold, because tomorrow gold could be pretty volatile with FOMC. We'll see how it reacted today with CPI. And I have over here on GJ, but we can do something different. We can, if you guys want an indice, you guys decide. NASDAQ US30, or what we can do is S&P 500. We haven't done S&P 500 for a long time, a top down, if you guys want to look at that. Also any forex pair, you guys let me know, but let's keep forex maybe more specific to the Tokyo session. So a lot of the Japanese pairs are really nice, whether it's GJ. Yesterday we did USDJPY was moving pretty good, so we can stick with that, or we can do more, guys, if you want AUD NZD pairs, but I like to do those if we have some AUD NZD news. That's why we're gonna have to go over Forex Factory and let's see what's going on. So guys, before we get started as well, I've got Bookmap on over here. This is a live liquidity platform, so it's showing futures prices right now. I currently have it on gold, so this is gold, the futures contract. It's GCG4, and COMEX is the commodities exchange. That's where we're getting all of this data from, and it's coming from Rhythmic. And I also have updated our new charts. So we've got NQ over here, H4 on the CME. So if we want to look at NASDAQ, we have it here. YMH4 on CBOT at Rhythmic. This is our Dow Jones, and I also updated ESH4 if we want to look at S&P 500. Okay, so agent, you love S&P and you trade it every day. Perfect. Okay, are you using Bradley? Are you using live liquidity while you're following it? Like right over here, guys. This is ES. So this is the S&P 500 right now. You see how it's trading at 47.04 and a quarter. So we can take a look at how it's trading in the book as well if we want to look at this. But to get started, I'll leave it on gold because that's what we'll be doing. Oh, perfect. You got Bookmap and book. Bradley, I said Big Mac. I meant to say Bookmap, not Big Mac, guys. You can tell I'm kind of hungry over here. Okay, I trade the ES actually. Amazing. Apex is the futures. Yes, you're right. Okay, guys, we're gonna be trading with Bookmap tonight, not eating Big Macs. Okay, so so let's get focused here. Ronnie needs to get focused. I'm thinking about Big Macs over here. Okay, guys, so let's get into it. Let's start to look at news over here. So this is our Forex Factory. Okay, this is not the high-end website for news, but it's free. So we like free stuff. So if you're getting started to trade, this is more than enough what you need to get started. If you're a beginner, this is where I would get started. If you're getting more advanced and you're getting more experience in the markets and you want to start to pay for better service or more data, more information, there is Bloomberg, but to tell you the truth, Bloomberg is a ripoff. I can't justify paying $1,000 or $2,000 a month for their information unless you're a big banker and you're trading big volume and big lot sizing. But normal retail traders don't need that high-end Bloomberg stuff. You can get away with investors.com. You can get away with Financial Juice. This is one here, Forex Factory. So this was today, Tuesday, December 12. We talked about some European folders that were coming out. More specifically, this is what the market was waiting for over here. This is our 3 USD folders. So today came out our inflation news. This is what CPI is. How many of you guys are getting more familiar with CPI and what it is? Okay, I know a lot of traders are just attracted to the folders and then they just watch the security. If it goes up and down, they buy and sell. But as you take your trading and your education further, it's nice to know exactly what these numbers are, what they represent, why they're released every single month. What does this mean? So this is where you take your trading to the next level, guys. You don't have to spend in-depth time to really read these, but there is a difference. There's 3 folders. One is core CPI, and one is CPI, and then the other one is CPI. So one is month over month, one is year over year, so it gives different analysis. Like if I'm just looking for month over month, this is from October to November. It's giving me the change in data from month over month. If I'm looking at more specifically year over year, so I want to know, is inflation, is it improving from this time last year to now? And then core CPI, we spoke about this yesterday, what it is. So just to get some information, click on the folder and it's going to give you more than enough information that you need. So where does all this data come from? The source is the Bureau of Labor Statistics. What does it measure? It's a change in the price of goods and services purchased by you and I, the consumers, excluding food and energy. So this is the only difference. When they say core CPI, then what it is it's excluding food and energy. And normally food and energy are causes inflation. This is the cause of inflation, is energy costs, food costs. If you go to the grocery store, you see the prices are getting crazy to just buy some ground beef and a steak. It's getting out of control. So but this core is excluding food and energy. So that is important. If you are reading this folder, it's important to know exactly what core means. And actual greater than forecast is good for the US dollar. It's released monthly. Okay, and then notes, food and energy prices account for about a quarter of CPI, but they tend to be very volatile and distort the underlying trends. So the FOMC, Federal Open Market Committee, usually pays more attention to the core data. Okay, so keep this in mind because tomorrow we have FOMC. So the FOMC committee usually pays more attention to the core data. So do traders. Okay, so core is important. And why do traders care? Because consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for the inflation containment mandate. So right now, tomorrow we have FOMC, we'll talk about it, but just looking at our core CPI that came out today, previous was 0.2%. They were forecasting a little bit of an increase to 0.3, and the actual number that came out was 0.3. So no big change in core CPI. It was exactly what they forecasted. And over here, we have CPI month over month. So the only difference is it's not core. Okay, so this one now includes everything. And you can see that previous was 0.0%, forecasting 0.0%. It actually came out 0.1% above the forecast. And then the big one is year over year. Okay, so a lot of swing traders, a lot of investors, a lot of position players in the market, they focus on year over year inflation. And you can see previous was 3.2. They were forecasting a little bit of a decrease, 3.1, and it actually came out. The actual number was a decrease. So what does all this mean? What is the overall goal? They want to try and get inflation down to 2%. That's what they're working on. So in order to do that, you see over the year, they have been increasing interest rates to the point right now where interest rates are paused. Last week, we had Bank of Canada release theirs. Overnight lending rates stayed the same. So I was reading a little bit myself yesterday and today. About 97% of financial analysts are calling for a no change tomorrow at FOMC. Okay, but that 3%, you never know what could happen. Things could change. But by looking at the CPI data, it looks like tomorrow is going to possibly be no change in interest rates. So let's move into tomorrow and we'll talk about FOMC over here. But before we get over there, if you guys are trading London live with Shahabibi in our London room over here in Zoom, we have GDP, gross domestic product, month over month coming out for the UK at pre-London at 2 a.m. And then we have lots of British folders, all at pre-market at 2 a.m. So if you guys are going to stay up or trade or get ready for pre-market London, make sure you are aware if you're trading anything to do with the pound, there is a lot of folders coming out, and there is one red folder specifically about the gross domestic product. Then as we continue to move more into New York, okay, with Dave over here at 8:30 a.m. Eastern, you guys are going to look at the core PPI, okay? So this is different from CPI. Now PPI, really quickly, just reading what it is, it's a change in price of finished goods and services sold by producers, excluding food and energy. Again, that word core. So anytime you see core, make sure you know you're aware that it excludes food and energy, okay? And an actual greater than forecast is good for the US dollar. What are notes? Why do traders care? Because you want to know PPI as well, not just what consumers are doing, but you want to know what actual finished goods and services sold by producers are doing as well. So it comes the day after CPI, and it's on the same day as FOMC. So tomorrow there's going to be lots of volatility, okay? Whether you're trading in London, there's going to be volatility. If you're trading 8:30 a.m. COMEX market open, we're going to have volatility due to these red folders. And then as we get more into the afternoon, this is the big one. Okay, this is the last FOMC of 2023. This is a big one. Federal funds rate. Okay, so at 2 p.m., this is where they release the actual number. Here it is. So we have previous 5.5%. What they're forecasting is a pause or no change at 5.5%. And that's what I'm reading. 97% of financial analysts are agreeing that there's going to be no increase, no decrease, just keep the rates the same, and then we're going to move into first quarter of 2024. We might see a couple pauses in the first quarter of 2024, and then if the CPI, if inflation is coming down to where they want it, Powell has said multiple times he wants to get it down to about 2%. Then if they achieve their inflation goal of getting it down to 2%, then what do you think they're going to do with interest rates? I'm just asking you guys a simple question. If Powell, head chairman of FOMC, can get the inflation down to 2%, what their ultimate goal is, what is going to happen with these interest rates? Do you think they're going to increase the interest rates? Do you think that they're going to hold them the same or start cutting them? Cutting interest rates. You guys are absolutely correct, okay? Because the whole reason to increase interest rates was to lower inflation. To make you and I not spend our money and go on shopping sprees and spend like crazy. So with extra payments we're paying on our credit cards, on our mortgage, and things like that, we don't have a lot of money to spend going shopping. So we're going to be more conservative with our money. They're going to bring down inflation, and then once they get it to their goal, then they're going to start bringing down. They're going to get dovish. They're going to start bringing down these rates, maybe quarter basis points at a time. We might start seeing this going to 5.25%, 5%, 4.75, and then get it to where maybe in 12 months, 18 months can be around 3.5% and then hold around there before all of this crazy inflation started. But I'm just reading you guys. Inflation is caused by government deficit spending and credit creation throughout the banking system. Yes, I agree with you, 100%. But you know, you and I, the consumers, we take the brunt of it, and we're the ones that get penalized over all of our crazy excessive government spending. Okay, so it's like governments are getting out of control with credit cards, and they can't pay off their interest payments. And what do? They just keep getting another credit card, or it keep just increasing their credit spending, and just spend and spend and spend. And you and I, the consumers, we're the ones that we get penalized. We're the ones that take it. But it's the way the markets move. There's not much you and I can do, but we just have to be responsible with our spending, number one, not just with trading, but be responsible with your spending. Okay, when things get tight like this, maybe just be a little frugal. Okay, I like that word, frugal. Be a little cheap, guys. Stop going on your spending sprees and start being a little bit more pay off your debts, pay off your credit, any extra money you have, pay off your credit cards, because these interest rates are high. You don't want to just be paying interest rates and making the banks a lot of money. You want to pay down your credit as much as you can. Then when rates go down, then you can start spending and going on your shopping sprees and things like that. Okay, so at 2 o'clock, we have just the release of the numbers. Probably 97%. It's going to be 5.5 here. And then we'll see how the markets react to no change. Probably just going to be some liquidity sweeps, high and low, a lot of stop loss raids and things like that. And then the market is waiting more for this. FOMC, the statement at coming at the press conference, coming here at 2:30. Okay, so 2:30, this is now, once the numbers are released, the market digests the numbers. It might be already baked into the market, because we've already been saying, not just myself, but financial analysts have been saying that there's going to be no change in over the last couple of weeks and months. So it could be already baked into the pricing of how high NASDAQ and US30 and S&P are right now. And then when Powell now comes to the conference at 2:30, this is when he comes to the podium, and he's gonna now talk about why maybe they paused. Why did they do that? Maybe there's an increase. Who knows? Maybe they do something crazy tomorrow where it's a 0.25% increase and nobody expected this, and it could drive the markets going crazy tomorrow if there's an increase or a decrease, because nobody really expects it. So then the markets will react, and then he has to now speak about what the decision was. Okay, and then also question period. He's going to take some questions from the audience and answer those questions. He doesn't really give a real answer. He'll always walk around the question. You know, politicians and these guys that do this are kind of trained to do that. They'll never answer the question. You could ask him right away, is a tomato red or is a tomato black? And he'll find a way how to navigate around that question and not really answer it. It's very easy. A tomato is red. I don't know. At least where I come from, when I eat a tomato is red. But he'll always figure out a way how to walk around that question. It's just what they do. That's what they're paid to do. So we'll see tomorrow. And then what you got to listen to, I don't know if a lot of you guys listen to actual him speaking or you guys just follow the markets. But if you have time, later on, listen to the press conference because he gives forward guidance as to what the decision is, and then that's what the markets are listening for. Financial analysts and swing traders and investors are listening to forward guidance. What is he saying could go forward for the next couple months or the next FOMC, because then that could lead you into maybe getting into a swing position and follow the volume and follow the markets as they go. And if you're a scalper, you can scalp your way to the next FOMC, and we get ready for it. Okay, so tomorrow, very volatile all day, starting pre-London, 8:30 a.m. Eastern. We got core PPI and PPI month over month, and then big FOMC. Okay, and this is the last one of 2023. So careful trading. Do not gamble here. Don't over leverage. Trade smart. If there's no trade, remain patient, because you might have to allow all of this crazy volatility to just go by. Let the storm go by, and then there's power hour, 3 to 4 p.m. There's another hour of trading, and then the end of the day you can dissect all the information and come back with us in Tokyo and London and New York the next day, and there will always be trades to be made. But let's not blow up accounts, guys. Let's not gamble over here. Let's not go high leverage and go into the fifth gear on this, because if you're on the wrong way, you could get a lot of damage to your account. Also, slippage and spreads increase due to volatility. So it might be different your spreads and slippage from normal trading with all of this going on. Okay, so be careful. And then let's move into really quickly Thursday. Thursday is a busy day. Okay, a lot of red folders starting in London. We have a lot of Swiss franc red folders. We got a lot of GBP red folders. European folders move into 8:15 a.m. and then we have more coming out at 8:30. We've got USD folders, red folders, core retail sales, unemployment claims. So retail sales month over month. It's gonna right now we see the previous and the forecast. We'll see the actual numbers, and then the unemployment claims that come out every single Thursday morning at 8:30 a.m. Eastern, week over week. We'll see how they're doing. Okay, and then we'll come back for over here for our Tokyo sessions, and then going into Friday. Friday again, busy in London. Okay, so we'll have Shahab over here, and it's French. You got French, German, you have Italian. You got a lot of things going on. Okay, and also going in Friday morning into New York. Okay, so quickly earnings. Hopefully you guys are learning a little bit about earnings. So this is, let's just go to quickly. Tomorrow is, what is tomorrow? Tomorrow is Tuesday. Wednesday. Tuesday. Where are we? Okay, let's go to Wednesday pre-market. Okay, this is after hours. This toggle switch will take us pre-market. Look at the time, 6:55, 7 a.m., 6:30, 7. If there's a specific security you're trading, make sure you understand which index it is comprised of, because that might move your indice that you're trading. Whether you're trading NASDAQ, you're looking at tech, you're trading S&P 500, or you're trading Dow Jones. Make sure you know if you're individually trading these corporations through option trading or equity trading, make sure you know. After hours, there's one big name that I would focus on, Adobe, right here at 4:05 tomorrow after hours. So you have Powell at 2, you got the FOMC at 2:30 Powell coming to the conference. 3 to 4 p.m. you have power hour, and then at 4:05 right when market closes you have Adobe releasing earnings. So it's going to be quite the day tomorrow, guys. Just be careful. Okay, and let's just move over into just a quick Discord signal that was sent out to the group today, and just quickly review it. This one right here, let's just talk about US30 that was released, what time it was released at, what we were looking for. Okay, so it came out right over here, 10:05. Indices AI bought long or buy US30 around 36,418, suggested stop loss of 50 pips and a TP of over 100. But this is how the chart is. Okay, so what we're looking for again is this area, 36,418, this line. So the volume came down, and when it got here, it closed below. So what we're looking for is the volume to come back up and trade above 418 over here. So finally it came all the way back up, and we had a 15-minute candle close above. So if you're a 15-minute trader, you could look for the next 15-minute bar to open up. Maybe it will come down to retest 418, 50% of that, and maybe catch a wick and continue to go up. It could also open up bullish, ignited, and maybe take out the wick and continue to go. There is traders who trade on 5 minutes, 3 minutes, and 1 minute, so they're following this on their time frames. So sometimes you got to follow your own time frame that you trade on. Sometimes these things will break out impulsively, but the 5-minute candles could have closed above and retested, and you could be in on a 5-minute setup. Okay, and then as it continues to move, you can see the next 15-minute bar, what I was just talking about, how it opened. Very small pullback, filled the wick and continued to move. Total move from 418 to getting it up there is about 50 pips. And then what we're aiming for is to try and trade up into this liquidity. There could be a pullback. If it ever does pull back, we're looking for support to be down here, all the bids to accumulate here. Maybe you could buy another pullback, and if it holds this area and continues to go up, it could be a higher low bottom at this level getting respected. And if we look at the final trade over here, how it developed, it just, if you were in there, you took, there's your 15-minute setup. There's no questions. That 15-minute closed above, yeah, we wait for a retest, but sometimes it's not there. Sometimes you got to know how candles open up, what the lower wick represents, how it's ignited, short wick can pop. If you're anywhere in here in a buy, stop loss below this area, and it continued to come up and trade into these liquidity levels for a total of 150 pips. But you could also scale out a little bit. You can go to a break even. You can take partials on the way up. That's all up to you. Okay, so that's just an example of how we send out signals, whether it's with the SST Scalper Pro or the AI bot, and chart provided, trade management. Obviously, you got to do a little work to watch what happens. Sometimes trades don't go exactly how signals are planned. That's why it takes a little bit of work on your end to identify. So and guys in YouTube, thank you guys for joining, almost 100 of you guys. I pinned at the top of the YouTube channel. It is our free Telegram channel right over here. Highly recommend that everybody signs into this. It's free. Okay, we show exactly what we're doing. This was Dave in New York. Some setups, how we take setups, members, what they're doing in Zoom, feedback from you guys, SST Scalper Pro signals, gold sell 300 pips and things like that. We give updates, all kinds of things that we do here. Okay, and then I'll speak about HankoTrade right now. And these are our links, guys. Okay, that's our website if you want to sign up with us. Instagram, give us a follow on Instagram, SST and myself and Dave, and we have our own personal Instagrams. We'll get posting on there more often. And this is it right over here. I don't want you guys getting scammed. That's why I go through this daily, because there's a lot of scammers that are coming in here, impersonating us, copying everything we do, same things, and they're asking you guys for money. You guys are actually, there is a couple people that gave them money and they lost their money because they're just saying, give us $500 and in 2 weeks we'll invest this money for you and we'll give you 10x and you'll make $5,000. So it's all BS, guys. Don't believe it. That's why I give you guys our actual link so you guys do not get scammed. That's why I go over this daily. I know it's getting repetitive and you guys are getting bored, but I would rather you guys get bored than you guys getting scammed out of your money. So this is our actual Instagram here. Give us a follow. This is me, Sniper Ronnie. That's my official one. And here's Dave Analysis, okay? Because there's a couple fake accounts that are impersonating us as well. So I would never ever message you guys, okay? Never ever. I would message you guys if I know you, see how you guys are doing, but I would never ask you guys for money to invest it and give you a 10x return. I'd never ever do that, okay? And broker of choice, HankoTrade, that's their link. And if you guys are looking for a EA trading software, we're working on Sniper Kill Shot over here. Many members are using this. Many are doing really well with this thing. So if you like something that does trading for you, set it and forget it trading, and you understand EAs and you want to learn about it with set files and things like that, we do have this Kill Shot, SST Kill Shot over here, okay? And just really quickly before we get into the charts, HankoTrade. Okay, this is a broker over here, HankoTrade. They're moving away from MT4, MT5 platform. You might see some more brokers moving away from MT4, MT5. There is their reasons for doing that, but they have now they're using their own in-house act trader, so they do have these different type of accounts. Yeah, I recommend like ECN plus, like raw account, where you know what your spreads are, you know what your commissions are, and then you can work out those numbers. If you're new to trading and you need something more like classic with a blend of spreads and commissions, then this is what it is over here. But just open up a demo account and test them out. Any broker you basically use, always start off with a demo before you go in, deposit any money. And then just over here, trading platforms. If you go over here, Act Trader, what is it? This is their new platform. Okay, and key features: fully customizable interface, interactive risk management, one-click trading. That's appealing to most people. One click, and this is what it looks like right over here. Still working on it. Yep, MetaQuotes is Russian-owned SP. I agree with you. That could be one reason. A lot of brokers are moving away from it. I don't know. I'm just speculating too, like you. Not sure, but this is what it is, guys. Dave and I are going to have a live account in here, and we'll show you guys how it works. It uses, guys, one-click trading right off of like TradingView. So here it's on Euro USD on the 1 minutes. If I want to jump in the market, if I can add sell, I can add buy limits, I can do buy stops, limits, I can do market executions, I can do everything in here. I have a watch list. All of my indicators that I use on TradingView, I can just populate in here. Everything that you want, how we normally trade off of TradingView, but I do it on a different broker. You can do everything in-house over here, guys. Like I said, open up a demo account and just try it with them, see if you like it. But they will be working out everything for the next couple of days and implementing this too. Okay, so let's get started in the charts, guys. Gold is just breaking down, just broke down, dropped down to 1978, now consolidating. We'll see if it can come back up. So you see right here on Bookmap how we just broke the VWAP, it pushed right back down, now consolidating right here. So I'll do full top-down analysis on gold. In the time being, if you guys on Zoom want to let me know what other charts you guys want to look at, we can get in there. We have 90 minutes, so we got a lot of time. Okay, and I just want to read any questions if I missed anything. I'm going through everything. Okay, guys. Yep, I know Instagram can be awful. You don't know how many messages I get daily about scammers and things like that. So kind of always want to go through that to make sure you guys have the right links. Okay, so let's get started with gold. Let's do a quick top down. Okay, and if you guys are in a sell right now, okay, so just again, if you're in a sell, that big body candle that just dropped, half of it is right there. So they are keeping the volume like below half right now, like right below there. So it is in a bear flag where it is flagging, but it could continue to push back down. It could build and close above here and then continue pushing back up, but maybe it will continue to push down. We got to see more offers continue to populate below the VWAP and start to accumulate these buyers and maybe still push down. Okay, but right now it's just trading sideways. We're consolidating, so it gives us enough time to do a top-down analysis. So let's start off with the daily. Gold has been really interesting, like the last 2 weeks. You know, when we broke that all-time high right there. So guys, get to know engineered moves, okay? And they happen on specific days of the week, like Fridays. Friday is a perfect day to set up a move, and then trading closes on the weekend. Who knows what could happen? God knows what happens over the weekend. There could be a war that breaks out. There could be a pandemic that starts. There could be anything, natural disasters, anything, earthquakes, anything that can change the markets. And if it's on a weekend, you know, things like this happen. So when they opened up on the Sunday night, 6 p.m., gold just took out. Remember, our all-time high was right here, like around 2078, 79 up there. It broke it out, all-time high, and we hit up there, 2050 block. Okay, so always, guys, if you don't know where things are going, stick to your psychological numbers. That's my advice for everybody here. If you have no idea where things could go, just use common sense. What are psychological areas? Remember what we talk about. Why are psychological areas important is because transactions can be made easier. We always talk about an example. If I have a coffee from Tim Hortons for $2 and I'm selling it to you $2 is easy. You give me a toonie, I give you a coffee. In Canada, we use these things called toonies. But that's $2. Or you give me 2 single American dollar bills. I'll accept those too. So you give me $2, $2. I give you a coffee. But if we make the transaction at $2.07, okay, now if you give me more, I gotta give you some change, or you gotta have change. We might not have change, we might not transact, and then no one gets a coffee, no one gets money. So we just lost a transaction. That's what the markets work on. The markets don't want to lose transactions. They work on efficiency. They are very greedy, the markets. They want to grab every single transaction they can possibly grab. So more transactions are populated at these psychological areas. It makes transacting easier and more efficient. Okay, so we took out the all-time highs. Looks like a big liquidity grab. Like, look at the size of that rejection wick at the all-time high. Massive. And then if you follow it, look at the body. Okay, the body opened right here. That's where it came up to all-time highs. Who knows how many pending orders were waiting to get triggered up there. Okay, there's probably a lot of investors who are in massive drawdown right now, because maybe there were buy limits and buy stops, hoping it was going to break all-time high and this thing was going to go to the moon. Okay, there's always a time where there's going to be a supply coming in the market, and it was right here at the 2050 block, and they pushed it down. Those guys, who knows, they could still be in the market holding a massive drawdown and looking for gold to come back up. And then, sometimes you and I, we get into trades and we go into drawdown. These could be big investors that are in drawdown and maybe going to start to accumulate a little more down here to bring it back up. Who knows? Or they're going to have to get squeezed out of the market and take a massive loss. That's how the markets work. You know how you and I, we trade, we win and we lose some money? Same with institutions and banks and corporations. If they want to play over-leveraged game in the markets too and they're on the wrong end, they're going to get hit hard and they're going to win or lose some money. So that's the way how these markets move. And if we follow the body, okay, so always follow the physical volume, the body. It opened and it closed below Friday. So it completely, the body engulfed Friday, and we have a huge rejection. So that maybe gives us the momentum to continue breaking lows and continue to sell off. So when we pulled back, we still held below 50% of the body, below 2050. That's a nice psychological area. How high did we come up to? 2040, around 2040, 41, 42. So that is our weekly resistance up there. And if we just draw like a zone, another zone right there, to that wick, to that wick, to that wick, and bring that red box across. Now I'm bringing it across. So I found where the new supply is. It's right here, 2040 to about 2030. Okay, it's a bigger zone, but I can see by the wicks came up and pushed down. The candle came up, the wick represents push down. Green candle came up again, rejected, and then the big push down on Friday of last week. And then we continued. As we moved into this week, Monday, gold continued to break down. Today we had CPI. So gold came bullish up here to 1997 and then push right back down and close down here. So we are still below 2000. That's another physical level in the market, 2000. And then let's see over here in the past. This was that 2008, 9, 10 area where it got rejected 4 times here. Here, 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 and here. So with multiple rejections, we find our zone. Let's bring it across. Again, it got rejected here, November 21 and November 22. Finally, we got a green body of gold close above, and there's our confirmation. It closed above. It was making higher highs and higher lows. Higher highs and higher lows, our ascending triangle. There's our critical breakout with the volume above, and then we get our confirmation candle and continue to move to our all-time highs. So this zone continued to bring it across. And look at it now. We traded into this zone Monday, and then they pushed it right back down. So let's bring this across, that 2008, 9, 10 zone. Okay, look right around there. So have we came up here yet? No, we still haven't even tested this. So how can we worry about 2030? How can we even worry about all-time high? We still got to get some momentum and see if we can get with maybe FOMC to come back up here and see what happens. Maybe it comes back up there and it gets rejected and pushed back down. If we move back up here and close above here, then maybe it might hold this area, might turn green, and then all of a sudden we're trading back up to this red box. Okay, so we're not even close to these areas, but right now, so we can see that the supply is coming down, supply is coming down, supply is coming down, and we see it come up today, lower high, or sorry, yesterday, push down and close here, and then here's our daily candle starting today. Okay, so before we even touch our daily candles, let's just get one more critical pivot zone just to prepare ourselves. This is a critical pivot. Point of interest, we were using this word as well, POI. Point of interest, pivot point, critical change in momentum, whatever word you guys want to call it, I don't care. Okay, but let's just understand what the market was doing over here. Here it kind of was still traded into here, push down, impulse break, push it down, volume stayed below, sell off. Bring this red box across. Right there, those two bodies, that candle, that green one came up to the red box and then it pushed back down. Picked up the liquidity and then had that big green body, 50% of it closed above there on October 18. So what do? With the volume above, we flip it green. Just go through the motions and bring it across. Okay, if you brought it across, then you're ready for that change, that momentum change, that POI, that pivot where it moved. So who's to say in the future if gold ever comes back down to this zone, 1937 to 1932, that it's not going to be a demand zone. Okay, that's why we're drawing the green box and getting ready just in case gold ever sells back down into here. We had big buyers right here. That's what took that all-time high leg up. It started right there. That's where it started. If you look from right there where it started, it was higher highs, higher lows, higher highs, higher lows, higher high, higher low, then the all-time high breakout. Okay, so if we ever do come back down in here, somebody bought here, some big institution bought this and took it to all-time high. Maybe that's a loading zone for them again to maybe get involved, get in here again, and then take it back up. Does that make sense, guys? Or you guys know what I mean? This was the pivoting point that where it started, where it was selling down, and this is where they stopped the market and the buyers came in, and that's what took that all-time high leg up. So they might be interested to buy again in this area. Okay, if we push and there's a lot of supply coming down and we close below here and then the buyers come back up, if this is now we flip it red and gets rejected, then all of a sudden gold is still selling down. Then it lost this critical area in the market. Okay, so we don't really have to worry about this right now because we're trading over here. Okay, so that's a level in the market, but you see where we're trading right now? We're trading in a physical zone right now. So if I was to draw just a line at this body right there, just to draw a line, just for reference, okay, a reference line. Try and get as many touches as you can, somewhere around there, okay? You're not going to be perfect, but right there's a body, a wick, body, got something going on there, a wick, and then let's just see this white line where it is right now. So you see where it is. It's around 1978, and we broke below this critical line on Monday and then came back up and closed above it. Yesterday we came down right about it and then we came back up. Today we might be breaking it again, but this might be an area where maybe we accumulate some buyers. So what I do is, what I look is below this white line, I look at where this move started. It came all the way down here red, and then they closed it right at that white line, and that started that big bullish engulfing candle right there. And then there's that wick there where it was green and then it got pushed down. So I'm just trying to find a little bit of a zone right below that line. Do you guys see what I just did right there? From that wick to that green candle to where it came up, the volume was still above here. I bring that zone green across, and then now I see that we traded into this zone and back up. Traded into it yesterday, and we might be trading into it today. But if it continues to hold here, this might be where gold starts to maybe pivot back up. So let me just get rid of that white line. I was just using that as reference, and then I'm going to bring this green box across. Okay, and I want to see with FOMC if we hold this area, will it come back up? Or if we physically break down, is it going to be an impulse break to come down and touch down and grab some liquidity? Or is gold going to continue to move up? Okay, so does this make sense, guys? I know I'm talking a lot, but I want you guys to kind of know the psychology of how it broke all-time highs and where it kind of started, where the natural pivot was. that pushed. If we look at gold overall, it's like overall it's bullish. Okay, here was the 1600s down here where it made higher lows, pushed up, took out that high right there, and then pulled back down, triple bottom, 1 2 3 here at 1810, held higher low, and then push breakthrough here. That's where the lower high was. They brought it down, but then that was the injection of volume that it needed to break this physical resistance over here and take out that all-time high right there. And we drove, and now it's coming right, could be trading inside these zones. Okay, so let's just now break down our daily candles. Okay, we've got some zones set up. So let's just break today's daily candle down. There's not a lot of volume right now, but still, let's follow it. So what happened with CPI? We opened, gold was green, came all the way up to 1997, still below that critical 2000 level, okay? That psychological level. Then it got rejected. They rejected it, and it pushed all the way down to where it physically opened, and then the sellers had more momentum and then pushed it all the way down. That was our low yesterday, and then it came back up and it closed right there. So it's a higher low from Monday. Okay, and then our last higher low was over here on Monday, November 20, where we dropped down to 1965. So I'm just going to place a line for reference just to give me a heads up, if anything, if it ever comes down there, that was a critical point in the market where this day, November 20, was red, 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 and then it stopped right there and found the buyers, and then it came back up, and then that's what started that bullish ignited candle the following day on Tuesday, November 21. Okay, and then there's some other critical levels down here. Okay, so that's the bigger one. But over here I've got a body and a body, and then look at how it lines up with these two wicks perfectly. So one more line right here. Okay, see what I just did there? I didn't do anything magical. Body, body. There's a wick that hits it exactly, and then another wick that hits it exactly around 1971. So if we break this green box tonight, maybe gold will come all the way down to here, 1971, and maybe stop there. Maybe consolidate here. And then maybe we'll find buyers bring it back up with a higher low. If it doesn't hold 1971 and sellers are still in control, then they'll push it down to this next critical low right here at 1965. And hopefully some buyers will come in the market here, because you see the big volume from right here to there. That's where I draw like a green box right there. And then I bring it across. And that might be my liquidity pool of buyers coming in here on the higher time frame. If this one doesn't hold and this one doesn't hold, I'm expecting to see big buyers inside here. Because this is what started kind of the 3-bar play, pushing right back up. When it came down, it held right here and pushed back up. We haven't came back down to retest these levels, but maybe it will come down, and this might be like a tap and go, where it comes down red. As soon as it comes red in there, it gets a wick, just like this one, and then maybe they do bring it down a little lower into here, and then all of a sudden it's coming all the way back up, gets rejected there, holds this position, and all of a sudden we're driving right back through here, and we're testing again 2000. Okay, so I'm just trying to figure out the next possible moves, what could happen, but we're nowhere near these levels right now, so we got to focus on today's volume. So what happened? No gaps in the market. We kind of opened up side by side, and it was bullish. Okay, so it came up, and that's our high of the day. 1982.83 is our high of the day. So I place a purple line up there, and I write high of the day. Okay, high of the day. Okay, so what happened at our high of the day? We came up and we got rejected. Is there resistance above us? Yeah, there's lots of resistance. Even the previous day came up there and got rejected hard, and the volume closed below there. Okay, so we came up here today, and what happened? We got rejected. We pushed all the way down. That's our low of the day. Okay, so our low wick, I'm going to place another purple line at our low of the day. Right there. You're probably not going to see it because it's going to be inside that green box. But I'm going to write in there low of the day. So this is our range currently. Is gold going to just trade in this range all day today? I probably doubt it. 1978 to 1983, $5, that's a 50 pip range. Okay, if we're scalping, our high and low of the day gives us enough pips to scalp in here as a scalper. But we're looking for bigger moves. So we're going to wait for, obviously, New York, 8:30 news, and more specifically FOMC at 2 p.m. Eastern. Okay, so what could happen is the market could consolidate in here until we get that big news coming out. But if we want to trade in here and we want to scalp in here, we can follow the volume. Okay, so it opened, came up bullish, got rejected there, sellers pushed it all the way back down to there, but buyers came in. They came in a little higher than they did yesterday. Even if it's just 10 pips, it's still technically a higher low, and it's higher than Monday since here. So this week, gold starting Monday is making a higher low, and a higher low. So technically, buyers are holding the daily position every single day. But when we come back up, it's not making any new higher highs. So this is what's called consolidation. So this is, you can see over here, the market kind of consolidated right here before it broke out. How many days did it consolidate in here? Well, this is 1 day of volume. This is another day of volume. This is 3 days of volume. And then this is the 4th day where it broke out, bull flag. So it came with this big green candle. It's kind of like the rally. It's the pole on a flag. Here's our 4-day flag. And then they broke it out. Okay, so we are inside this consolidation zone again. So we had some red volume on Monday, we had the red body yesterday, and this is where we're trading today. So again, it might consolidate in here, and again, if the buyers on the daily can break it out of here, maybe close it above here, maybe we're going to push up to there. That's one possibility. Maybe for a couple days it's just going to trade in here, but I can't see it trading inside here with FOMC. I can see it breaking out of here. Or option 3 is sellers are going to bring it down here, come back up, get rejected, and then start to push down to this or to this. Okay, so that's daily candlesticks. You and I, we're going to break this down to 1 hour, 15 minute, 5 minute, and we can trade in between. Okay, so there's going to be a little bit for everybody. But if you're a daily swing trader, I know some of you guys like to swing gold, you guys got to wait. Okay, we got to wait and let's see what happens. Maybe wait for the close of tomorrow to see where the volume is after FOMC. That might give us direction. So after FOMC, if we close green above here, maybe that might be continued bullish momentum. If we close after FOMC down here red, might be more selling pressure. Excuse me, guys. I have a bad cold, so I'm losing my voice. I'm trying to do my best over here, talking, and hopefully you guys can hear me. But I'm struggling with my voice over here. Okay, so let's just grab some critical areas. We did some point of interest, some critical areas below us if it's bearish. But what about if it comes back up? If the buyers bring it back up, we fill our wick, and then we come to our high of the day. If we break out, is it going to fill this huge wick all the way up to 1996? It could, but we need to get a little bit more other critical areas. So let's just talk about these bodies right here. This is where we had a body, a close and an open. So to me, that's an important pivoting area in the market, especially on the daily. So right there, I'm going to draw a line at that body, and I'm going to make it yellow. Okay, so, and then I always look at the number. I look at the number after I place the line. And then the number is about 1990. So to me, that's a nice psychological number. 1990, 1980, 2000. They're nice whole numbers. And it also lines up perfectly with a body-to-body continuation move. So I'm confident with placing a line. Again, I use yellow for other daily levels that are not the high and low of the day. Again, do you want me to call it something? We can call it again. We can call it Mickey Mouse line. I can call it whatever you want. It doesn't matter. As long as we just know that this is an important line, that when price action gets here, we got to show some respect. We got to show some emphasis on this line. Okay, so what do I normally call it? I usually call it a daily critical level. That's what I call it. But then someone said, Ron, that's not a critical level. Okay, then if it's not a critical level, let's take out the word critical. Let's replace it with a daily resistance level, okay? With the volume below us, that is acting resistance. Someone might say, Ron, let's not use the word resistance. Okay, what else do you want to use? Someone said, let's use POI, point of interest, daily point of interest. Perfect. Let's use daily POI. Someone said, Ron, let's not use POI. Let's use something else. Do you guys get my point? I don't care what you guys call it. I can call it daily Mickey Mouse. It doesn't mean anything to me. All it means is when the volume's getting up here on the lower time frame, I have to pay attention to this area. It's kind of like a red flag. Pay attention to this area because this is where the market opened and closed and pivoted at a different time in the past. So I'll call this, guys, daily resistance POI. Okay, maybe that satisfies everybody. I know I can't please everybody. It's the nature of this game, and I apologize, guys. If I'm offending anybody by using this name, daily resistance POI, and you're offended by it, I apologize. I know this day and age, you cannot please everybody. It's one of those days someone is going to get offended. Okay, so I'm not doing this to offend anybody. It's all good. All lines matter. Okay, I'm going to get a t-shirt made saying all lines matter, and we got to pay attention to them. Daily jacuzzi line. Okay, let's call it the daily jacuzzi line. Whatever you guys want. But do you see now, if I measure that move, okay, 1983 to 1990, $7 move on gold is 70 pips. Okay, just simple math. If you can't do it in your head, there's this handy tool right here. It's called a ruler, and just go from there, measure the tape. This is called old school tape reading. Okay, from purple to the yellow, it shows me about 675 points. And then, or if you want to translate it into pips, that's about 67.5 pips. Again, learn the language. Pips and points are all different. Okay, but we might come up, and it might not come all the way to that point of interest. Like it might come, it may do this. Technically, it could do that. Yes, it could. But maybe it will come up, and then it's a lower high. So we got to look for other critical point of interest or pivoting points. So if I can't determine something like that wick, I can put a line there. I can put a line on that wick. But when I see like a body to body, that I place more emphasis on the body to body. It gives me kind of, I know it's critical because the market closed specifically there for a reason, and it opened there for a reason. Okay, so that gives me another point of interest. So this one now is about 1985, 1986. So what happens if it comes up to that yellow point of interest and then maybe gets rejected? So that still means I can still trade in there, but now it's not as big of a move. It comes from 1983 to 1986, $3 move. That's a 30 pip zone. So again, if you get your ruler and you measure from the purple line, the high, and we break out, we come up to there. See how it's 300 points, 30 pips. Okay, so now I know when I'm scalping, I'm talking scalping, guys. I'm not taking a long position on gold and I'm going to hold it for 2 weeks, because if I'm going to do that, my zones are going to be much bigger. I'm looking for the bigger supply zones. I'm just talking about scalping, intraday scalping. From there, maybe I collect 30 pips. Perfect. Nice trade. I got to respect this zone because it could pull back. If we break out of here and volume closes above, yeah, then we can come up to our next daily POI. Okay, so again, I can write here daily resistance POI again, and then there's also R1, R2. Some traders go by that, like actual pivot points. So you can label these if you like as a daily resistance POI, and some people do it like number one. They can do R1. I'm just doing this to please everybody. So you can have on here R1. Then what would the next one be above? I have to go here and modify this. It's not, then I can put R2. So then, like some people just do this. They just write R1, R2, you know, and same with support. Support, this would be support 1, this would be support 2. Okay, so see what I just wrote there? Daily resistance POI, R1, resistance 1, because the volume is below. And then if the volume closes above there, for example, if it comes up and closes above and then pushes this, then we have to modify it. Daily support POI. Okay, because if the volume is above, this is no longer resistance. This is the ceiling, but if the volume breaks above it, it can turn to the floor now. And then we work our way up to the next resistance. Again, if volume closes above there, this will be daily support, POI 1. This will be POI 2 down here, okay? So I'm just trying to set up our grid map, our charts, in order to trade this. And if we continue to push up, again, maybe pick your next area where it could scalp up to. Right there, I got a body to body, I got a wick, and a body to body. I could place another line there. I could place another line right up there at 1998. I could continue to do this all day and get ready for the weekly moves. But that's good enough for now. Let's get into the lower time frames now. So what I'm going to do is just get rid of this consolidation box. And what we're going to do now is we're going to break our daily candle down. We're going to dissect it to lower increments. So what I like to do is I go right into the 60 minutes, the 1 hours. You can go into the 4 hours. You can go into the 2 hour. You can go whatever time frame you like. I just personally like to go into the 1 hour because now I look at specific hourly times, sessions in the markets. I like to look at London, 2-3 a.m. I like to see pre-London, London. What did gold do at that time? I like to look at 8-9 a.m. Eastern because that's 8:30 is commodities exchange, especially if you're trading gold. Make sure you know 8:20 a.m. Eastern. There's red folder news at 8:30. Then we have Wall Street at 9:30. So that's a pivotal time, volatile session, an injection of volume in the markets. You got to know that time frame. And then maybe the end of the day, 3 p.m. to 4 p.m. That's power hour. Maybe get to know how they close the markets, how they close. And then again, futures market is 8 p.m. Eastern and 9 p.m. like our time over here. So when did gold make its big moves? Okay, so we can clearly see it's trending down. I can see all the way from here, from Friday. Big rally, big red candles coming all the way down. Green buyers buy it up. But you see 1, 2, 3, 4, 5. That's 5 hours where the buyers brought it right back up. And then it came to this critical red level. And then they pushed it back down. Came up again, 50% here. Lower highs, equal highs. Push it back down. Come up again, lower highs. And then they really solidify it with a big red bearish candle. When was it? Monday, 9 a.m. Okay, so know the specific times, and then they really bled it all the way down to where it stopped right here, Monday at 1 p.m. and then we found our bottom. Okay, and then it came up, but then we got rejected at our daily resistance POIs. Got rejected, came back down. Higher low again. They tried one more time again to break it above here. They failed. They couldn't do it. I don't see any green volume closing above that yellow line. Then what do the sellers do? They push it back down. But when it's coming down, you can see it's making higher lows, higher lows, higher lows, higher lows. So technically, the buyers are trying to bring it back up, and they managed to break it out of here. This was now yesterday, CPI news. Gold was a fake out. It came up bullish. It came all the way up. But again, guys, this is now, please, if you're following me, put it like a thumbs up, just so I know that you're following me, because this is really important. Okay, this is where now you can now identify hourly structure in the market. Okay, so if everyone is following me, please thumbs up. I got to know that you guys are following me, because if not, this is probably going to go right over your head, and again, you're not going to know what Ron is doing. So I got to know that you guys are following this. Even if it's just one chart, 2 charts, I need to know, because you can do this on your own. Carlos, do you understand what I'm doing, bro? I know, but everyone else probably not paying attention. So this is after the fact. Guys, I hate this, okay? You know, this is kind of like back testing and saying, well, it went here, you should have done this. Well, it went there, you should have done that. But you guys know, if you guys know me, you guys know I prepare my charts ahead of time and I stretch my boxes across, so I wait for the liquidity to come in here. Now, if we didn't see today's candle, do you see over here that this is a pivoting area on the hourly? It's the same shit that we just did on the daily, but now it's hourly. Tell me now, do you guys agree with me? Do you see a pivoting point right there in the market? Okay, just 2 bodies, 2 candles is all you need. Someone want to debate me? If someone wants to debate me, go ahead, let's do it. I'll have fun with this. Okay, you see how it's red, it came up green, lower high, push down, big red, and then it stopped. Do we see any more red candles pushing down here? Is there any more red candles? No, I don't see any unless I'm colorblind. But I see at this point, I see 1, 2, 3, 4, 5 green candles coming up. So this is why I use that word critical. And someone said, Ron, don't use that word critical. I'm like, okay, if you don't want to use it, don't use it. But for me, this is a critical time in the market because the market was bleeding and it stopped right there. It's like when you put a Band-Aid. You know when you guys cut yourself and you put a Band-Aid, you temporarily stop the bleeding. That doesn't mean that the bleeding is going to stop forever. It's just a temporary pause. Do you guys understand that analogy? If you cut yourself, if you're slicing tomatoes, remember we were talking about tomatoes, okay? Sometimes I slice tomatoes, I make a nice mortadella sandwich, and I put a tomato in it. Maybe I cut my finger. I'm going to put a Band-Aid on my finger, but maybe I cut it really bad. Maybe that Band-Aid is only going to last for 30 minutes, and then the bleeding is going to stop, and then maybe I got to go see a doctor. But that's where the market put a Band-Aid right here, and then it came up. Now, when you identify a pivot, bring the box across. Very simple, okay? And then you see, again, we came down. 1, 2, 3, 4, 5 bars, came all the way right back down. And then what happened? Do we see any red volume close below there? No. I see it come right back up. But then again, it's a lower high. It comes back up, and then they really push it down. There's the red candle that closes below. So when things close below, what do we do? I want to make this interactive, guys, because I'm getting sick and tired of listening to myself every single day. What do we do when the volume closes below a box? What do we do? 50%, you're right, Carlos, always 50% retracements. Flip it red. Noor, you got it, okay? Guys, very simple stuff. The volume is below now, so this is no longer a green box. Let's just change the color. Change it red. And then our bias is on selling the market instead of buying, so we don't get trapped in counterbuys. And then bring it across, okay? If you brought it across and then you consolidated this shit right here, okay, right here, hourly. Sometimes I do this on the 5 minutes, okay? I love 5-minute trading because 5-minute trading is faster. I like a faster reward when I trade. But if I was an hourly trader, I would trap this area and wait. I would set an alert up here, maybe to buy above 1997 if I see hourly green volume close above there. Or I set an alert when it breaks the lows down here, more specifically maybe this critical daily yellow line. Then when it goes down, that's a bear flag. We're making lower lows, lower highs, lower lows, lower high, flag, and then continue breaking down. But don't stop with your box. We need to make a song about this. Don't stop your box, stretch it across. Okay? I'm not a freestyle rapper, but that's a good line. Okay? Right there. Could we have caught today's move? You tell me. Okay? If we did this ahead of time, could we have caught that? Absolutely. Absolutely. Could have caught it with a sniper kill shot. You could have had a pending sell waiting up there. You're waiting with that supply. So CPI, look at what they did. Now let's understand the engineering of the move. They use CPI data to initially pump gold right into 1996, 1997, this supply block, which didn't break. So it came up there, they collected all of the liquidity, they got all the pending orders, they faked out all the buyers, and then they rejected it and then closed it down there. One more time at 9 o'clock, it came up again for confirmation up there, rejected that level, lower high, and continued to push all the way down. Near the end of the day, 1 p.m., we found another bottom. So this was bottom 1, maybe bottom 2. Maybe it's coming back down for bottom 3 at the low of the day. Maybe we're working on something. Maybe if you want to trap all this hourly garbage inside here, trap it for now. And then wait for London, wait for New York, wait for FOMC. I can guarantee all of you guys that gold is not just going to trade from 1978 to 1983 in a 50 pip zone all day. We are smart. So let's see if the buyers can continue to accumulate this green box. If it trades inside here, maybe don't sell this. If it trades in here, let's see if the buyers will step up. Let's see if they'll come in and bring it right back up. And if we build something here, maybe we might get that high of the day breakout, and then we can scalp up to here. We can scalp up to here, and who knows? See up here, I'm not ready for what's going to happen at 97, but I bring the red box across. I get ready for it. And if it breaks through there and the buyers bring it through there, guess what? I'm ready. I'm waiting at 2006 and 8. I'm waiting up here. I'll sell the market up here. You know, I wait. This is higher time frame. Here they sold the market. Why would they not sell it down here? Okay, so do you guys understand what I mean by why it's important to see these green boxes? I got these stretched out into the new year, into February. My birthday is February 2nd. Bring these boxes all the way to February 2nd if you want to, and then you guys know to notify me that it's my birthday, and you guys can buy me a nice birthday gift. Okay? I like coffee from Tim Hortons. That's the only gift I want. I'm trying to get a I see, Prashant, you wrote double bottom. You know what I'm reading? I'm seeing a double. I'm telling you the honest truth. You wrote double bottom. You're absolutely correct about a double bottom. But when I'm reading it, all I'm seeing is a double. If you guys don't know what doubles are, Canadians, we drink these at Tim Hortons. It's 2 milk, 2 sugar. Double. I think it's only us that use that term. I go all over and I say, can I get a double in different countries? And people are just looking at me like, what is this guy? What is he talking about? Sorry, guys. That's just me going off tangent. But do we understand right here? Okay. Thumbs up if we got this. Because I'm telling you, this will change the way how you trade tomorrow. You'll be a different trader. 100%. I guarantee you. You will change as a trader right now. Just by knowing your... And this is hourly, and I'm not even an hourly trader. But I set up my charts so I'm ready to scalp the markets. So right now, what is the hourly move? Okay, so we came down from right here. We came down. We came back up. This is our neckline. Are we closing above here? No. You can clearly see it's coming down. Red, maybe red again. Okay, but we just came down. And then it's coming right back up. So maybe this might be our leg that gold is going to come back up to maybe test resistance right over here on the hourly, 1980, 81. Maybe it might come all the way back up and test the high of the day. But maybe it just trades inside here and we got to let it consolidate in here. Unless you want to scalp this area, okay? So if we're going to scalp inside this box, again, let's measure it so we know what we're looking for. From the bottom to the top. About 50 pips. That's not bad. We can scalp for 10 in there. We can scalp for 20, maybe 25, maybe 30. Maybe we get a full move. Like if you bought down here, came all the way to the top, you got 50 pips. If you sold up here, came all the way down, you got 50 pips. Now it might be coming back up, but it's kind of mid-range. So we got to now see. Do you guys see what I'm seeing? I see other critical level right over here. We had this big bullish hourly candle come up. And then the retracement was right there, back up. Retracement was right there, back up. Bullish candle, start next leg up. So I'm going to place now a white line. I know I haven't used this color yet. I've only used yellow and purple, but now I'm placing a white line. White will be for hourly reference, okay? Do you see what I did there, guys? If you don't know what I did or if it's going over your head, let me know. All I did was I saw the big bullish hourly candle come out Monday at 1 p.m. and then the pullback stopped right there. The next one stopped right there, and then it started the next move up. Again, when we came down red, right down to that white line, back up. Came down red to that white line, back up. Here we broke it, but we closed above it, and then we came all the way down. When we came up green to that white line, push back down. We impulsively broke below it, above it, and then they closed it right below it. Red, again down there. Now we're green. So the retest came down and held. Now we closed red below it. There's the retest that dropped all the way down. So I'm going to use this white line now for reference for my scalping. This is 1980.44.50. What am I going to call this right now? I'm going to call it, let's call it hourly. Hourly, because that's what it is. That's where I'm getting this line from. Hourly, 60 minutes. Okay, hourly. If the volume is below it, I'm going to say hourly resistance. And again, if you want to use that fancy POI, use it. Okay, whatever you guys want to call it. Now, I'm really now trapping the volume because I'm going to go into the 5 minutes. So now, maybe we're developing the second leg coming up on the hourly, but I want to see some 5-minute volume close above this white line to maybe make this hourly support, and maybe I can scalp back up to the top up here. Okay, so Do you guys understand what I just did from, I know guys, I'm spending a lot of time on this, but I love the Tokyo sessions for education. I love the Tokyo sessions to teach because you can learn this and you can go to town in London, you can go have fun in New York, but sometimes when the markets are moving so fast in New York, I don't have time to really talk about this. You just see me quickly putting lines all over my chart and some of you guys have no idea what I'm doing. So I'm actually taking my time, labeling, walking you through this. Guys, if you guys appreciate this type of stuff, let me know. If you guys just want to go right into trading the markets, let me know, because I'll go right into trade the markets. I really don't care. But I spend this time, take it out of my time, this time late at night, to spend this time with you guys to really help you guys learn this stuff. So if this is helping you guys, please guys just hit the like button on YouTube. That's all we want in return. If this is helping, just hit the like button. That also gauges interest to show me that if you guys like this stuff, we do more of this. If I see 0 likes on there, then nobody likes this. I don't need to waste my time doing this. Okay, so helps, guys. It really does help. It helps me, not just helps YouTube, but it really helps me to know that you guys want to learn this stuff. If you don't, just let me know. We'll go right into the markets and we'll start scalping. You guys know me. I'll go right down to 1 minute, 30 seconds, 10 seconds. You guys should see me scalping 5-second candles. It's ridiculous. Okay, now we are on our favorite time frame. For me, 5 minutes. This is bread and butter for me. I love 5 minutes. 1 minute, I love 1 minute, but I think 1 minute might be a little too fast for some of you guys. But look at this, guys. Okay, 1 minute, they've got their own. Remember, if I didn't tell you this was 1 minute, I could tell you that these are 1 hour candles and you guys would have no idea. I could tell you guys this is 60 minutes. Each one of these candlesticks represents 60 minutes of trading. You guys would have absolutely no idea. But what we can see is same characteristics across the board. Okay, is this not the shittiest zone? Let's be honest. Would we not just trap all that garbage right in there? I would. I would. Okay, if I see this, just go up green, red, green, red, green, red. Eventually, something is going to happen here. Eventually, remember, price action only has 3 directions. That's all it is, Tony. 3 directions, bro. I know you appreciate this, so I'm talking to you, Tony Gold 410. Price action, volume, 3 directions. No more, no less, 3 directions. We just have to be correct more than 50% of the time and we're good. With good risk management, guys, we're making money daily. I'm telling you the honest truth. You only have to be a 60% trader, but with proper risk management, you can compound and make money. You don't need to be a 100% trader. You forget that. You don't need to be. I know guys that trade 50% and they're raking in good money every single day. They have days that they lose, but other days they pick up their losses and they continue moving forward. But with this now, sniper trapping gap, where we coined this thing, one thing that can happen is we're going to just trade in the box. Okay? Right there. It did it. It traded in the box. But we are smart enough to know that volume will eventually, on any time frame, whether it's 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, daily, weekly, monthly, yearly, every 10 years. I wish there was a 10-year candle that I could see decades, because then we would know where we're moving in the next decade. Okay, they don't give us that data. They don't want us to know that data because they know we'll do some funny things in these markets with that data. So they only give us up to, most brokers won't even give you a yearly candle. But believe me, guys, I've been trading these markets for over 20 years. I can be your yearly candlesticks for you. I can tell you guys what my eyes have seen. And they've seen a lot. Okay, so what is another direction we're looking for? We're looking to break down here, sellers in control, and then obviously big green zone down here. This is where the bids are waiting, and then maybe they bid it back up, and in this will turn, we change the level. Look at low of the day. What if this becomes resistance, and then they reject it, and we sell down here? Okay, that's option 2 for selling the market. Now, what happens if green volume closes above here? And look how sexy, look how nice it looks, where it came up here, closed above. Okay, and then we have nice bullish ignited candles, and then there's our run up. Where did we run up to? We ran right up to this physical area in the market right there. And if we're scalping, okay, so that's a beautiful scalp move. It doesn't get any better than that. Yeah, you had to wait in here. You have to be patient. Okay, try and teach yourself to not trade this garbage. Set alerts above, below. 3 things can happen. Yes, there could also be a fake out. Okay, I'm not going to just always say that we're always going to see this. There could be a time where it comes up, breaks out, volume closes above, but then your next bar comes down red and closes back in the box, and then we're trading back in the box. That's a fake out. Okay, it happens. Okay, that's the markets. Welcome to the markets. We're going to get faked out every single time we trade. Your job as a trader is to prevent how many fake outs you take and not to go all in on an impulse move. Study it. See what happens. We've got more volume closing above. If I take that trade, okay, if I'm looking to buy that trade, I buy maybe right there. Where do I place my stop loss? Okay, so let's talk about all of this. Where do we place stop loss if we buy up here? Okay, if you're a conservative trader, maybe you want to be right below the previous low wicks. That's really, really tight, okay? Because a 1 minute candle or any time frame candle could come right back down, red, catch a wick, and then go right back up. Then you've missed out on the big move because you had too tight of a stop loss and you got stopped out right there, okay? But to each is their own. You'll know how to place a stop loss when you know your risk for appetite. What I would recommend also is you look at the big body of the candle. Okay, we got 50%, huge candle. Okay, that's an unusually large candle from everything inside here. Half of it is right around there. So some traders will place it 50%. Okay, and what I also do is when I see a big body candle like that, you guys know what I do. I draw a green box and I bring it across 50%, just in case there's another time in the market. And look, I'm doing this for us to get ready for another 1 minute buy coming up. See what I just did there? That volume, 50%, was right above there. Have we came into this green box yet? No. So if it ever does come back down red, maybe it's a tap and go. Maybe it comes, taps that green box, and it's going back up. We haven't came in there yet. So who's to say that gold won't come back down here in the next 30 minutes, 1 hour? Who knows, okay? I'm trying to get ready for the next move, okay? But also we're talking about stop losses. So that's 50%. Or you just bring it below the entire consolidating box, okay? But then someone's going to say, Ron, holy shit, that's a huge stop loss, okay? Just measure it so you know ahead of time before you even take the trade. If you buy up there, coming down to half, 50%, you're risking 5 pips, okay? In the Tokyo session, 5. If you come all the way down there, you're risking not even 10 pips, guys, okay? It's not huge range, but that's 10. Maybe in New York, this is going to be bigger because more volume. This might be 20 pip zone, but then your reward is, right now, it's moving 10 pips. So you're getting about a 1-to-1, 1-to-2 on your money if you take this trade. And then we're not guessing, again, we're not guessing where to take profit, okay? Because 1 minutes, they make pivoting areas as well. If I was looking over here, is this not we talked about this. Did the market come down red, go back up, and come down red, and stop right there? It stopped right there, okay? Do you want to debate me that it didn't stop here and it kept going down red? At this particular time in the market, it didn't. It came back up. So I found one pivot in the market. Bring it across. What happens now? The volume is red below. It's red below. It came up there impulsively, trapped those buyers, bring it back down. Came up again, rejected. Came up again, rejected. Came up one more time, rejected. They trapped all those buyers, and then look at what they do. Elevator red candle coming down to clean up all those buyers that impulsively bought up there with no 1 minute green volume closing above. With the volume below us, make it red. Okay? And bring it across. Look at, we're trading right into it right now. Okay? See this move that came up? Did we tap right into that red box? We were off by maybe a couple points, okay? So sometimes you got to use a little bit of common sense. If it doesn't hit the zone entirely, 100%, it happens, guys. But if you didn't do anything, it pulled back. Are we still holding the current breakout area where we broke out up there? We are. So you see how it came down, back up, came down, back up. Now it's tapped right into there. So that could be a take profit target. and that's good for 12 pips. That's all the market is allowing right now. It could continue to be building and break out of here and then test our hourly resistance up here. Okay, so that was 1 minute analysis. Sorry guys for going off topic, but this kind of sums up everything what we just did. We learned about pivoting areas, we learned about consolidating areas, we learned about a breakout, we learned maybe how to position a stop loss. Is there anything that I didn't cover that, like, we need clarification on? Because I feel like this is pretty good. If you want to trade 1 minute, that's 1 minute. And that's a nice move zone to zone for 10 to 12 pips. Some traders will say, Ron, that's only 10, 12 pips. I want 50 pips. I'm going to tell you the same shit. I want 50 pips too. But you know where 50 pips is? Okay, let's measure this. Okay, from right here, if we took this trade, that's about 10 to 12. That's, for me, that's a perfect target. Okay, but let's continue to go up. Look at our next resistance right up there. That's 25 pips. Okay, if we continue to go up to the top, right there's 40. We got to continue breaking out of here to get 50 pips. You see how far it is? Okay, we got a lot of work to do to get it up there. But now you're turning a scalp, you're turning it into a intraday hold, okay? Because could it get up there? It possibly could. But when I'm scalping, I'm looking just from one area to the next zone, get my money, get out, and then look for another trade. Right now, are we closing above here with any green 1 minute volume? It came up, went back down. Came up, went back down. Came up, went back down. We could see now maybe sellers maybe continuing to push it back down to this green box. Who knows? But every time it comes down, it's picking up higher low, picking up higher low. So you got to continue to follow the momentum of the market. Okay, so sorry guys, I went on 1 minute. I wanted to talk about 1 minute. I'm not sure why we came in there, but I wanted to show a trade setup where you can see this is what we got to look for. Okay, so let's go back to our fives and look at our fives. Our fives are building. Okay, our fives too. Look, if you don't want to trade 1 minute candles, it's all good. Go to the 5 minute candles. Did this 5 minute candle come all the way down? What's half of it? Okay, I probably smoked a bigger joint than everybody on this call, and I can still see half of that red candle. Okay, right there. That's about half. Am I right or am I wrong? And I'm looking at the body, open to close, halfway. Okay, and then don't stop. When you see it there, you've now consolidated it. You've trapped it right there. That's it. Trap it. We just went over on the 1 minute. What are 3 possibilities where volume can move? Did we not just do this on the 1 minute? Now we're on the 5 minutes. So what's the difference? Just the time frame is the difference. We can continue to trade inside here. It came down, back up, down, double bottom, double, Tim Hortons right there. We're looking for the continuation breakout. Okay, it could break out to the upside. Yes, which it's doing right now, or it could have, the red candle could have came down there and closed below there. We would have retested this and maybe we would have been selling down there. Okay, in this situation, we had a double bottom hold at the low of the day with nice volume. Okay, those are big body, that's a big body candle. So number one, what I do is I always identify half of that big green candle just in case there's a pullback coming down to 1978.50. It's not there yet. Okay, so this was an ignited bar. Listen to what I'm talking about, guys. Let's go through everything that we talk about. This candle opened, came down red. Did it break that low? No. It came up with a higher low. Did we come up very bullish? Yes, we did. Okay, we engulfed 1, 2, 3, almost every single red candle. We engulfed them. Look at where we closed. There's barely a wick on the top of this 5 minute candle. It closed right near the high. Look at this. This is our ignited bar, guys. This is our playbook. This is our scalping playbook put down right now. I'm telling you guys, if you want a scalping playbook, this is what it is. Low wick, ignited bar. Did it come down to test 50%? No, I always assume it's going to come down to retest. You got to know that sometimes bars open up in demand. Bars open up strong. They want to continue moving because it's coming from a higher time frame. It's coming not from the 5s, it's coming from the 15, it's coming from the 30. This is coming from higher time frame. And it could breaks and there's your pop. Okay, for some scalpers, that's what we're looking for. That's a trade I'm looking for in New York. Okay, I'm telling you, because that's a nice fill. But if we miss out on this opportunity, some of us do, you'll miss out. Don't get flustered. Don't be this person buying the highs up here, because wait for the pullback. Sometimes it comes, sometimes it doesn't. But when you identify 50% of that red candle and you do it your zone across, now we close above it green. Continue with your zone. Bring it into tomorrow. Bring it into next week. Don't stop. And are we above it? Yes, we're green. Did it allow us to get maybe back in? If we never bought this candle, don't tell me it didn't allow you right there where it came down and came back up, came down higher low, and one more time. You could have bought any one of these bars and then place your stop loss. Maybe, again, we talked about this. Conservatively, you could have been right below that ignited bar. If you're really, really tight and conservative, I would at least minimum 50% of this bullish candle. But some traders, believe it or not, put it all the way below structure. Okay, and that would have been your opportunity. If you never bought here, there's your opportunity. And it came up, filled those wicks, and coming up to a higher high. Can it touch our hourly resistance white line? Quite possibly, but maybe it might just not even touch. Maybe it comes back down. Okay, so again, if you're happy with getting a certain amount of pips on a scalp, be happy with it. If you're still holding this move, like if you're watching it, did it come down to touch? Here's another unusually large bullish candle. What's half of it, guys? Okay, half of it, probably right around there. Maybe a little, maybe half, okay, right there. But you know our zone, a little bit above, a little bit below makes life good, right there. And then you cover everything. So if you don't get it exactly 50%, give it a little wiggle room, little above, little below, okay? There's my next scalp zone. If it sells from here down to there, guys, you know me. I'll be on that trade. But I measure it. Is it enough? Is it enough meat on the bone for me to eat off this? Maybe it's only 5.5 pips right now. This is not the time to be scalping real inside zones right now. This is the Tokyo session. Okay, so it's not enough for me because there's a spread involved, there's slippage. Not good risk to reward to take that trade. But if this was New York volume, absolutely. From there to there, maybe that's a 15 pip zone, maybe a little bit bigger. Okay, but see now how we're retesting 50%, coming back down. Is it going to hold? Is it going to hold? It got a little wick here. Is it going to continue to consolidate here? Again, I can trap this volume right now. See, I can find exactly now how it's trading. Okay, I bring my consolidated box to the bars, to the volume, right there to there. Okay, maybe it's going to just trade inside here too. Remember, 3 directions now. 3 directions. It could just trade inside this box now like this and just continue to flag up here. It could eventually maybe break out bullish. It tried right there, but it was an impulse, no volume close above. Maybe if we get another bar closing above there, we retest this. We might take out that hourly resistance and work our way into this structure right over here, maybe up to 1981.50 right there. Okay, and then what about the third direction? If we push below here, maybe we flip that red, and then all of a sudden we're coming down to this green box. If this green box can't hold, then I'm looking 50% of that big bullish candle that started the second leg of this move. Okay, does all this make sense, guys? And then we can do this on any security. I don't care what the security is. I don't care what the chart is. I don't care anything. Okay, I trade price action. You don't even have to tell me what we're trading. Half the time you don't even have to, you can blindly just tell me a chart. We can go in it and I'll chart it and we'll trade it. And I don't even need to know what we're trading. Okay, I like to know what we're trading because then my mind starts thinking about what are we trading, time of day, what security is it, do we have news that, but ultimately, guys, honestly, I'm telling you the honest truth. If you gave me anything and I have no idea what it is, will that stop me from trading it? Probably not. All I need is candlesticks. That's it. And we can do this. That's what I'm trying to tell you guys. Just pick a security that you guys are comfortable with. So you get to know it. You get to know it inside and out. Like you know your spouse, like you know your kids, like you know your friends. You get to know them. You get to know its personality. You know how gold trades during, right now, this is gold during Tokyo. Does it look good to be scalping, or is gold better to be trading scalping in New York? That's what you got to know. How do these specific securities trade in London, in New York, in Tokyo? And then that's why I don't really trade too much Tokyo, because there's not a lot of volume. You know, it's just, I used to trade Tokyo a lot, but for learning, top notch. This is Tokyo is when I learned everything. Guys, when I was in school, I used to come back from school and then I used to put in hours, 7, 8, 9, 10, 11 p.m. This was when I was studying. I was watching these moves. I'm like, okay, I'm learning exactly what's going on. I'm going to test this in New York. And when I tested it in New York, my mind was blown. I couldn't believe how easy it was to scalp for 10, 20, 25 pips with minimal to no drawdown. Just learning this stuff, okay? But guys, that's gold, okay? And then if you want to kind of complement your chart with some with some indicators, okay? So to complement your chart, add some indicators, okay? I use this one, 9 EMA, okay? Traditional 9 EMA, most of you guys use this, and a 200. Nothing special. Most of you guys use these things. You can add a 9, a 21, a 200, a 100, 1,000, whatever you guys want. It doesn't matter, okay? What I watch this for is I watch to see, are we still holding above the 9, okay? Because currently we're counter trading. Okay, if you're in a buy right now, you're counter trading the original sell that happened at 7 p.m. today. When the market came up, it came up to that 200, and since then, lower lows, lower highs, lower lows, double bottom right there. The buyers are trying to push it back up, but you can see that's hourly resistance. The 5-minute buyers got a lot of work to do to get it up here. Are they getting tired? I like to look at this indicator too, RSI. This is strength. This shows you if you're getting tired, if you got a lot of energy. So you know when things get up here above 70, this is not just a signal to just hit the sell button, okay? But this is where you can use confluence. Okay, so I know if something, any security goes above 70, it just tells me that it's getting overbought or over exhausted. It's getting tired. Okay, so now when it gets tired, I look at my chart. I look here. I have a purple line up there. That's my high of the day. I got to put emphasis on the high of the day. Who do I give emphasis on at the high of the day? The sellers. Because the sellers maybe want to hold the high of the day, unless the buyers can prove to me that they can close above it, okay? So I put emphasis, even at the low of the day down here. Who do I put emphasis on at the low of the day? The sellers or the buyers? The buyers, because it's the low of the day. Maybe this is where the demand is building. I see the double bottom. So if my bias was on buyers, I would have bought gold. Up here, if my emphasis on the higher time frame was on the sellers, I would have sold gold. Now, there's pieces of a puzzle. This is how you, Mikey, bro, this is how you connect your playbook. You know, I was just doing a jigsaw puzzle with my daughter right before this call. Okay, so this is a jigsaw puzzle. That's what trading is. We got to figure out the pieces of the puzzle and we put them together one piece at a time, and then everything will make sense. So number one, we did a top-down analysis. If I didn't add a 200 EMA, okay, I still have my high of the day. That's why it's important to do top down, to get ready for the moves. Okay, so when it starts coming up there, we know it's approaching the high of the day. Do we want to buy the high of the day? Well, now I maybe add a technical indicator to complement my chart. I see, okay, it's close to the 200. Maybe it's not gonna move above the 200. Maybe it might be just an impulse fake move up here. Okay. Also, what is RSI doing? RSI on the 5 minutes is completely overbought, and it did like a double top up here. So this might be a time to maybe think about selling the market, stop loss above the high of the day, and then you make some money coming down. Okay, so also down here, when it's coming to the low of the day, I look at the previous time where it broke the low of the day. And you see, that's how far down it came down to. So I start to level up this area. I see the bodies and the wick right there, stopped right there, green. So I'm figuring out where my liquidity pool is below me. When it did trade down in the bigger demand area, that's where the 5 minutes came down, back up, and has not came back into this area. So I bring that across. You see, we haven't even touched into this green box. Maybe it was close to do it right here, but it didn't. So we consolidated out of there. Again, let's look. When we came all the way down to the low of the day, now RSI is below 30. It's not a buy signal, but it's telling me that now it's oversold. Now we might get buyers coming into the market. And then if you just don't buy right away, if kind of you trap this area right there, you consolidate it. Maybe you don't want to trade this garbage. Follow the price action. Follow the move of the market. Follow your patterns, okay? Is that pattern going to play out every single day we talk? No, but sometimes they do. And if you get comfortable with a couple patterns and you perfect these things, that's a double bottom neckline breakout. Okay, it broke out, it came back down to retest the breakout, and it went back up. Okay, did it touch now? Remember, what do I place emphasis on? Prashant, let's do this together, bro. I love interaction. Okay, so I'm making it look easy, but I want you to make this look easy. So when these 5-minute candles came up here right now, okay, we're at this 50 area on RSI. This is the neutral area. This is where things can trade sideways, where buyers are not in control and sellers are not in control. Anytime it comes close to the 50 area, this is where it's neutral. And then what I do is I put more emphasis on my higher time frame. So again, we have a white line. Where do we get the white line from? Remember, we were looking at the 60-minute candles. That's hourly resistance. So when which one do I put more emphasis on, the 5s or the 60 minutes? 60 minutes, because it's higher time frame. So what I do is, that's why I use these red boxes, guys, or green boxes. It's for me, to control myself. So I see what happened above, at this time above the hourly. They faked out the market. It came up and went right back down. And then you see the volume when it tried to come back up here again. Look at, they rejected it 4 times. Right here, it got rejected. 1, 2, 3, 4. Any green volume close above that white line? No, they brought it down. Okay, bring your red box across. Did a green candle right here at 605 close above? Yes, and flip it green. Why did we not buy there? Okay, maybe we weren't in the markets at that time, but that was a perfect buy opportunity. I know it looks perfect right now, but we're setting up our charts for success in the future. Okay, same box now. We're above it. Now, bring this box across. We're getting our zone at our higher time frame area. Now we've got a red bar close below. If you flipped the green to red, you could have maybe got ready to sell the market. Why? Because look at the retest. The retest came right into, assume it's going to open green. It did. It came up green, 50% of the bar, and then pushed back down. Look at the next retest. Again, came up green, 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 right into the red box, and then they really pushed it down. So bring your red box across right below that hourly resistance. Give more emphasis on the higher time frames, and we kind of traded right into it, and then they rejected it. And then you see that little imbalance move right there? That's what I was talking about. It's not enough for me to trade right now for 5 pips, okay? But in New York, I'm all over this trade, especially with US30, because this is, you guys know that if you trade US30, a candle like this is about 20 pips in New York. So with a 1 pip spread, you're making at least 15, 18, maybe 20 pips on that. But look at how it just came down and caught a wick, okay? So remember, we measured this. I said, if it's pushing back down here, it's going to come down to there. It was about 5.5 pips, and it just filled. From right there, it's an ignited bar, took out the low, came all the way down to our green box and caught a wick where all these buyers are waiting. So maybe it's going to consolidate in here. But you can see now, we're going to see if it holds here. Maybe our next zone of consolidation now is above here. It's inside here. Again, if you don't feel comfortable trading this zone, just do your boxes, do your colors. This is red now. Okay, and then wait patiently. It might still trade inside here. There might be another attempt for buyers to maybe bring it back up here and try one more time to break that hourly resistance. Or if it kind of closes below here, now we're below the 50 on the RSI, maybe it might start to come back down and the selling pressure is in control. Or maybe it can close below here, retest this red, we come for that 50% of that green candle, down to there, and then come down maybe to the low of the day. If it doesn't hold, guess what? There's that green box I'm bringing across my chart. Whoops, I don't want that. I want to show you the green box right here. Okay, so where did I get that green box from? That was over here. This was Tuesday at 12:50 before we went into 1 p.m. Eastern. Okay, bring it across. Maybe we come down. That might be a buying opportunity down in here later tonight. Okay, so you guys see how you can scalp the markets on any security, but you got to know the security. Like if you're trading Forex, if you're trading USDJPY, maybe like it's got smaller zones because the volume is not as heavy as like trading indices or trading gold or anything like that. But and then you combine it with a live liquidity platform like this, Bookmap. We're watching the gold book the entire time. This is the white line, the volume weighted average price line. It's kind of where the institutions like to wheel and deal in here, and it came right up to our institutional line and acted as resistance, and they continued to push the market down. So we can use this VWAP at critical areas on our trading view chart. Okay. And then if you don't want to really trade these little smaller zones, then play the bigger zones. Wait for something to happen at the low of the day and wait for something to happen up here. Get rid of all of this inside stuff. If you don't feel comfortable trading this, then don't trade this stuff. Don't trade like how I do. Don't worry about the smaller moves. You worry about the bigger moves. Look up here. This is going to be a big move tonight, okay? Put an alert up here. If everybody can do this for me, please put an alert at this white line. Right click on TradingView. If you have this, right click, add alert right there. Create it. Perfect. See what I just did there? I added an alert on my TradingView chart. There's the clock. Okay, I will get a physical alert on my mobile phone or desktop if I'm here. If gold comes back up here, alert. That's it. I get my alert. Now I come to the charts. I watch. Remember what can happen up here. Gold can come up here. Just because I get an alert doesn't mean I'm going to hit the buy button. It could be a fake out and then go back down. Okay, but I'm still alerted to watch what could happen here. It could break out and then I flip the box green. It could turn into hourly support. All of a sudden, maybe it comes back and does something like this. Then I'm buying. And then I'm buying this level. I'm buying. I'm going to place my stop loss below whatever structure is being formed on how it's coming up. And then what's going to be my TP or my target? I could target in here, okay, if I'm scalping in there. But overall, maybe we're going to try to come up to this big red box again and try to touch up into the high of the day. But if I'm just a small time scalper, that's all I'm looking for right there. You see, the market came up here, rejected back down, came up, rejected back down, came up, rejected back down. It could come up again and get rejected right there. So I place a line for emphasis right by those bodies that could be my TP1 from here to there. And I measure the move so I know exactly, measure it, okay, 10 pips, 10.5, okay, 10. If it can go up to that high of the day, 20, 25, okay? But when it comes here, I make a decision because the market already decided in the past that it came up here and then pushed right back down. So before it can come up to this bigger resistance, there's a zone of resistance right here in the market. So do you guys know what I mean? I just go zone to zone. From this zone to that zone, from here to there. That's all I do when I'm scalping. You know, if you measure your zones, let's say they're 10 pips. If you look for 5 good zone setups, 5 by 10, you made 50 pips for the day. That's it. You're done trading for the day. Maybe if you want like 100 pips, that's why I trade US30. Because then a nice body candle fill is about 15, 20 pips. 5 by 15, 5 by 20, you're making 7,500 pips a day. If you know what lot size you're using, you can already factor in your head mathematically how much you could possibly make that day by scalping. Remember, if a trade goes against me, they do, I close the scalp fast. I don't, like if I bought up here, for example, okay, if I bought up here thinking it's going to break out, I bought, my stop loss, like I said, is right here. So unfortunately, probably I would have been stopped out right now. Because if I didn't get stopped out now, look at the bleeding. Now it turns into a massive loss. So I could just negate this loss. Maybe we'll take away one scalp win, and now I'm neutral for the day again. I'm break even. But if you learn how to do this, there's some days where you're scalping and you got momentum. You might have 10 scalps all blue. You might have 15. I've seen some of you guys do 30, 40, 50 scalps in a day, and they're all blue. So even if you take a little loss, who gives a shit? Take the loss and accumulate your other pips by scalping. But don't turn a scalp into now you're holding this thing for 6 hours and you're hoping and praying it's going to come back up, because it could be a major disastrous loss to your account, and then all your scalps for 1, 2, 3 days, 1 week are gone in a single trade because you lack discipline. So you have to have discipline. Sometimes you're going to get faked out in a market and it's going to go against you, but have your stop loss at a strategic area, and if that happens, it happens. You're stopped out. Oh well, everybody gets stopped out. Okay, I do, you do, Dave does, banks do, everybody does, okay? But don't get your ego above the game here, that thinking that your analysis has to be 100% correct and you're always going to get it's always going to pull back to where you entered the market, because the market will maybe diverge away from you and keep pushing down and move away from you, where you're in big trouble. And if you over leverage that trade, unfortunately you're in big trouble. Okay, so look at it. It's testing the low of the day. Look at, guys, okay, I know I want to be trading with you guys, but look at the body. Okay, red, 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 close right near the low. There's absolutely no wick on the bottom of this candle. Look at the retest. Okay, was this zone not green? We've made it red. Look at it. It opened bullish and it came right up to the red box, got rejected. There's no wick. This is what I call a firecracker. Firecracker exploding. Low wick, and then allows the floodgate of selling volume to come all the way down and take out the previous low. If it drops, there's the green box. That's where the buyers might step in right there. Okay? And then now, look at what that scalp can turn into. Okay? It can turn into where you scalp right here. You got down to there, down to there. Now it turns into, look at 15 pip trade. Okay? And then you go down to a break even. And hopefully it continues to break down. But if it comes back up, okay, remember what we were saying. What is about 50% of the red candle? Open, close, half of it, probably right around there. Okay, so if we pull back and we hold 50% of this candle, then maybe we're still going to have momentum to push down and come down here. Here it comes up now. So let's test half of the candle. Okay, it's coming right back up. But that's a target too. The low of the day. Don't get too greedy. If you took that 2-bar candle trade, 15 pips to the low of the day, scale out a little bit. That's a good trade for tonight's volume. That's a perfect trade. Okay, you guys know what I mean? How if you're scalping the markets, have the scalping mentality. If you're looking for bigger holds, stop looking at 5-minute candles. If you want bigger trades, look on the 15, look on the 30s. Okay, go to the 30-minute candles. Look at the 30s. Okay, the 30s are consolidating. Look at it. It came down red. It came back up green. Come back down red. Okay, so something is going to happen on these 30-minute candles down here. Okay, whether gold trades down or it's going to come back up, and something's going to happen at our hourly resistance. Okay, we have lots of news coming in, going into London, New York. We have FOMC. Maybe this is going to build maybe a nice double bottom. Okay, look on the bigger picture. Look on the 30s. It came down. There's our first bottom. There's our big neckline right there, the high of the day. Okay, these are 30-minute candles now. Okay, and then we came all the way back down to maybe our low of the day. So if we hold this position and we see 30-minute building, maybe it's going to come back up, and then 30 will break our hourly resistance, maybe retest this, and then maybe it's going to try for the big high of the day breakout, and maybe FOMC we're driving. Okay, but also don't neglect the low of the day. Gold can still continue to sell off. Okay, if some of these 30-minute candles start to close below this box here, 1975 I'm going to say, and then they come back up, and then they use the purple line, 1978, as resistance on the daily, that means that selling pressure is coming from the daily. It's coming from the higher time frames. And if it keeps coming down, and then gold starts selling off, break 1975, we're dropping. Okay, and then FOMC could continue to push gold down, depending what Powell says. Okay, so it's going to be interesting. But you see where we are. We're at a critical area in the market. This is where the 30-minute candles pivoted right here and came back up. Now we're coming back down. Okay, so if you don't want to scalp the markets, you don't need to. Just use all of price action knowledge and bring it into the time frame that you want. Okay. Okay, guys, so I know it's getting late and we spent a lot of time on gold, okay, but we still have 10 more minutes, okay? So I will give you guys in Zoom the live chart of gold really quickly. I really, guys, want to educate, like in this period. I know it's exciting, we can get a lot of trades in, but you guys can do this without me. You know what I mean? If you guys learn this. Okay, so in Zoom chat, there's a TradingView link. It's gold. See, guys, right there. Okay, remember, okay, this was done before this candle kind of like I just identified half of it. Okay, we came down, it broke the low, and now it came back up to the halfway point. It got rejected, but then it's coming back up. So we have to gauge how much time is left on the candle. 1 minute and 15 seconds, lots of time. So every time it comes down, it's picking up buyers and coming right back up. You can see in Bookmap how it kind of transacted down here, but the buyers are asking to trade up here. Okay, but we will see when the final bar closes, where will it close? Still lots of time, 1 minute. If it can close above here, then maybe the next candle is going to retest this, turn it green, and then all of a sudden we're coming back up to here. Okay, but at the end of the day, sometimes you got to wait for the candle bar to close to give us full confirmation. Otherwise, it's just the high of the time frame. It did come up there, but then it got rejected. So it's still telling me that there's sellers up there. Maybe it needs to consolidate. Maybe it needs to build in here now. Okay, like in here. Maybe we got to trap this. And then we wait for the next move. Because if you're in a sell, that's a perfect sell, came down there, and now we're going to see the low of the day is going to build another big bottom here. If it keeps selling down, sell down into here. Okay, see guys? Okay, if you got excited and you saw the green candle come up and you bought up there, look, you're in trouble. You're in drawdown. You're holding the bag right now. Okay, and then it's a spin top candle with a little tiny green volume. Okay, and then look at the next bar. They're opening it green, ignited. But look at the size of the wick. We've got a long wick. It's not one of those short firecracker wicks. Okay, this is a long one. So it's kind of, think about you when you're running. This is, you got to run this marathon. Think about run. I smoke a lot, okay? Me to run all the way up here, I'm going to have a heart attack. I'm probably going to stop breathing. So think about the candle. It's got a lot of momentum. It's got a lot of volume. It's got a buy to get up here, okay? So we hold emphasis on the selling pressure, okay? And then if it comes up again and gets a lower high and they reject the move, it's going to try and tap into this low of the day. You see how it came down, broke the low of the day, come back up. Broke the low of the day with a lower low, come back up. But now it's bullish ignited, but it's got a long way to fill. Yes, you see that quick rejection? See that? See how it came up? Okay, came up green, ignited. They caught the buyers, and then once they catch you, then they flip the script. Then they flip it down. So this could lower high, lower high. That's why you got to be careful buying this bar, because the wick before is kind of telling you a piece to the puzzle. You know, if it was short, yeah, we probably would have popped and we would have been in a buy and got some nice pips. But look at now what they're doing. So they faked out the buyers, and now here it comes down. So if you're holding your trade, if you're holding your sell, like, I know it gets scary when it comes up green, 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 but if you were selling from up here, you still got to go with 50% block. Okay, listen to what I'm saying, guys. I'm telling you, it will really, really change the game for you guys when you're trading. Just sometimes, guys, just watch the candlesticks without even trading, like how we're doing, and you'll get more confidence. Sometimes when we take trades, you guys are just looking at your MT4 and you're looking at how much money you're making or how much you're losing. You're not even paying attention to price action. Sometimes, just for one day, tell yourself, today I'm not even going to take a trade today. But what I'm going to do is I'm going to do what Ron does. I'm going to do the charting. I'm going to follow the fake outs. I'm going to follow 50% levels. I'm going to go with the trend of the market, how it's moving. And that's what you're going to do. And it might change everything for you. Then come into the markets and start trading money. Okay? But sometimes you're too focused on your MT4. You're forgetting about what's more important here. Is to the learning process. Okay, and see how it just dropped like that? Remember, this is a Tokyo consolidated session right now. If this was like New York, a fake out like that on gold, that thing could have dropped like real 15, 20, 30 pip drop. Same with like if we saw this set up on US30, that thing could really drop. But it came down, okay, low, lower low, lower low. But I'm going to see what will happen in this big green box if it ever comes down here. So just marking this now, like I mark every single candlestick almost. I see that the low is right there, 1977.775. That was the most previous low. Okay, so it did break down the low of the day, but if I'm waiting, where's the body closing? We got a 90 seconds. Look at it. Now it's coming back up bullish. So If it can close, look at how they're toying around with this. They're playing around with it. Okay, so are we going to bite on these fake moves coming down? Are we going to bite on the fake moves coming up? No, they're just playing games right now. So we got to wait for physical volume to either close below here or above here. Sometimes when you're not in a trade, just watch. Just watch what happens. We know, we're smart, that maybe it's picking up all of this liquidity in this bigger demand area and it's making a higher low. And then if they bring it back up and then it kind of closes above here, pull back, maybe it's going to be bullish and start coming its next leg up back up here. I love price action, guys. Like I love this stuff. I don't know how traders don't love price action. To just focus on indicators, it takes the fun out of trading. Like I love indicators, but look at this 9 EMA, how boring it is. Like look at how much fun it is trading down here and the EMA is up here. Or RSI. Like RSI, yeah, we broke the 50 and coming back down, so that kind of confirmed. But watching live price action, it's a leading indicator. Okay, you see the physical moves in the market happening in real time, and then you use these indicators to help you out. But when people ask me, price action is king. If you want, you can debate me on this. But when you learn price action, you are ahead of the game. You are your own leading indicator. Okay, so there we closed with a red body below the actual purple line, the low of the day. But do we have conviction on this candle? It opened suspect green, came up there, and then they rejected it, and it came down red. When it came down there, it came back up green, came up green, and then we closed with a little red volume. But it's an ignited bar. The size of the wick matters. Okay, remember, the size of the wick. If it was a really, really short wick, it would break and maybe find its new low. So we still have an ignited bar. It's trying to break its previous low. We have to, that's why I place a red line. Okay, I'm very technical when I trade. Very, very technical. Okay, did it come down and touch our red line? Actually, it didn't. Okay, so we know what tweezer bottoms are. They're equal lows. This technically, it came down, but stopped right there. It made a higher low, just right above it. So when we're looking at the depth of market, a higher low is very important because it tells me one tick of bids, one block of bids held that move. See, now it's getting very volatile. So it came back up, and then remember this candle opened ignited red. So you give emphasis on the open higher time frame when it opens. And you see how it kind of flipped green? That candle gets a lot of buyers excited to buy. But you're buying where a bar opened ignited red, and again they push it back down. But look, it created a new low. So technically, sellers are still in control of this move. They're making lower high, ignited bar with a lower high, and a new lower low. So technically, sellers are still in control of this leg. I thought right there the buyers were going to build on it, but they did. And then when it came up, remember this was a bearish ignited candle, the way it opened. And then they absorbed those buyers and then pushed it down for a new low. Again, the buyers just brought it up, and then the sellers are pushing it back down. So this is a very technical area to be trading. This is the low of the day. Sometimes where we get the high of the day and the low of the day, you have to be very careful with here because this area, anything can happen here. But now I'm looking in the futures book, see the big heat that's coming in the market right now? We've got a big order sitting here at 1992 with 62 bids. Okay, so maybe the market is going to come down to my green box, the bigger green box I have here, and that's kind of illustrating where that big block order is in the market. Josh, thank you guys. If anyone is enjoying today's education, give a like. Thank you, Josh. I appreciate you, man. Emmanuel, how can we learn price action? I don't know if you joined late, but for 2 hours, I've just been talking about price action. From the top to the bottom, from daily, hourly, 5 minute, 1 minute to where we are now. So I would advise you to rewatch this session. Okay, unless I don't know where else you can learn price action from. There might be other YouTubers that teach price action or scalp on the 1 minute, 5 minutes live, but I just broke everything down with like writing down low of the days, walking you guys through it slowly. Maybe you joined late, but that's why I always ask you guys, as we're on the stream, do you guys understand what I'm doing? Because I don't want to go over your head. I don't want it to be someone who's been on this call for 2 hours with us and is still confused as what is price action. Because, that's it. The call is going to be over very, very soon. And it kind of just explained everything for you guys. Okay? There's a lot of people that charge a lot of money to teach you that stuff. We don't. All we ask for is a like on YouTube. It's just mutual respect, appreciation for what we do to help you, educate you guys to do this. We want you guys to be able to do this. Freedom to trade, financial freedom, but it all comes with risk management. Okay, you're not going to get rich quick doing this. Believe me, I'll tell you guys. If I got rich quick trading, I'll be the first one to tell you guys. I struggled. My first early years, I struggled because all that was on my head was getting rich. That's it. It was just getting rich, driving all those fancy cars and things like that, and not knowing what I was doing, over leveraging. All I did was just lose money. And finally, when I said, okay, I got to really learn this stuff. I got to sit down, stare at candles for about 6 months without even taking a trade and follow every single candle. Learn what fakeouts are. Learn what liquidity grabs are. Learn how candles make structure. Learn how the importance of top-down analysis. Learn the importance of risk management. Learn the mentality and the psychology that it's okay if I take a trade and I lose. It's okay. It's not the end of the world. We can recover, but we got to recover by using a proper stop loss. If you get in trades and you're thinking that you're bigger and you're better than the markets, these markets will humble you down real quick. I've been humbled, just like all of you guys have been humbled by these markets. We're not above these markets, guys. Okay? We don't have the capital, we don't have the liquidity, we don't have the leverage to do what these guys do in the markets. Banks, institutions, corporations. But what we can do is we can eat a little bit of the crumbs they leave behind. For you and I, 50 pips, 100 pips, 0.5%, 1%, it's some nice crumbs to eat and you can make a good living out of it. Lisa, how am I doing with the ACT Trader? Dave and I have implemented it. The other guys, that other prop firm, take profit funding, I'm done with that. I passed that phase 1 in 1 day. We were talking with them for, guys, for over a week, 10 days. I was telling them to get those 10 days done so I could get on to phase 2. They were not willing to really work with us. We tried to change a couple things with them, like the unlimited days to kind of match what other prop firms were doing. They were kind of reluctant to do that, so I'm not using that prop firm anymore. I'm not using a prop firm right now. I'm just trading with my real account with Fusion currently. But Lisa, yeah, we're talking with Hanko, the Act Trader. Dave and I are going to use it live as well. But they're still working on everything. But it is well. You can take trades right off of like TradingView, one-click trading. So Act Trader is really, really good too, actually. But we're waiting to see. We have traders in our group who are using Hanko with it, and currently it is working fine. No issues with it. What other brokers do I use besides Hanko? Fusion Markets. Fusion. But if you're from US or Ontario, Canada, where I'm from, it's no longer available. Yeah, USA, you're not. Check Blueberry Markets. Blueberry too. Maybe they accept USA. IC Markets is good too, Prashant, in the States. Okay, guys, so you see what happened down there. Okay, so it broke the lows. Sometimes it's not the best to be selling the low of the days, but if you were already in that big sell coming down, this is where maybe you should be thinking about, hey, this is the low of the day. We came down. Maybe I should do something down here. Maybe I should physically take some money out of the market on the sell. Maybe I should put a trailing stop loss coming down because the market might be moving up. That's just a thought, okay? I always have this saying, if you don't do anything at these critical areas, point of interest, these areas, if you don't do anything, the market will decide for you. It's kind of what I've been saying from day one. If we don't decide, if you're in a sell and you took that down for 15, 20 pips down there and you don't do anything, the market will decide for you. It will come up and maybe tap your your trailing stop loss, your break even, or maybe your stop loss if you get greedy. Okay, so just know that sometimes a decision has to be made here. And if you close the trade entirely, it's all good. You made some money. If you close 50, 60, 70, 80% of the trade, life is good. You made some money and you got a runner going, okay? But what sucks is when we don't do anything at these levels and then the market comes back up and tags us. It happens to all of us. And so as a scalper, maybe just get in the markets, do your zones. When it comes down to these areas, think common sense, what should I do here? Okay, so now it's trying to come back up, but you see no green volume closing above here yet. So I'm already looking, my mind is already thinking of what's going on. It came down, it's coming back up. Maybe it needs to come back down again with maybe a higher low or a physical double bottom, pick up more volume, more buyers, and then they have the momentum to break it out of here. Then we retest this, and then all of a sudden we're coming up here. Maybe we're coming back up here. Okay, so again, just allow the market to do what it needs to do sometimes. Just let it physically do. If you're not in the trade, if you're not in, you're on the sidelines, you're a speculator, just sit back, relax, and let the market do its thing. And when you see what it's doing, maybe it's making a bigger double bottom down here at the low of the day. So this could have been a physical liquidity grab at the low of the day. We still have this big block sitting in here that's ready to be initiated if the market ever does come down. We've got some big bids sitting in here. Okay, so gold could maybe physically come back up, and then if we look at the bigger picture, this could be where it's making its move to come back up, close above here, come back up to here, maybe trade inside this consolidated box again, flag, and who knows, maybe gold is going to try for that hourly resistance. Maybe it doesn't. Maybe this is a lower high, they reject it back down, and then all of a sudden, back low of the days, and gold is bearish, going into London and New York and FOMC. Okay, guys. Was that MSG? It was the take profit funding. No longer going to use that. They were reluctant and not willing to do a few changes to make it competitive with like other prop firms. So just didn't really get a good taste and didn't want to use it. Okay. Yeah, Lisa, you can trade right here, HankoTrade. So right over here, like here's Hanko with the Act Trader right over here. If you want, Lisa, like start off with a demo account and just test it out. Okay, demo one-click trading right over here. Here's Hanko. This is the live account that Dave and I are going to get started. We deposited 4,000, and again, Lisa. Okay, so you have trading view, Euro USD, 1 minute, 5 minute time frames. We can add our indicators over here. Here's the one-click trading. So I can sell, I can buy, I can add buy stops, buy limits, price level, quantity. I can place market. I can do market executions. I've got live news right over here. My watch list news. I've got everything like at my fingertips over here. If I want to trade volume, everything that is on basically TradingView. All of my indicators. But now I'm physically trading on Hanko's platform with Act Trader because they're moving away from MT4, MT5. Some brokers, you're going to notice that some brokers that maybe you trade with will be moving away from MT4, MT5s in the near future. Someone said on the call that MetaQuotes is affiliated with Russia. That's why originally they got pulled off of the App Store. Maybe that has something to do with it. I'm not 100% sure on this. I just do what I'm told, like with what's going on, what brokers are doing. So I just want to educate you guys that Hanko is moving away from MT4, MT5. They have their new platform, and that's what they'll be using. Okay. Lisa, how did I get there? Go right here. Okay. HankoTrade #1. Okay. Go to their right here. This is the HankoTrade.com, and then if you want to read about them, and then right over here, see Lisa, trading platforms, Act Trader. So if you have any questions, everything will come up here under Act Trader. If it will come up here, I think here it is. So why choose Act Trader? Everything is here. If you want to download it, okay, you can download it with Windows, Android, iOS, iPad, Web Trader Live, Web Trader Demo. Always do a demo when you're doing this, okay guys, always start off, any broker, anything you guys ever do, always start off with a demo. Make sure you demo it to see if you like it. Okay, and then if you don't like it, don't use it. If you like it, use it. But not just with Hanko, with any broker. Start off with a demo, okay? You don't just got to jump in the markets, deposit your money and start trading. Get a feel of it. Maybe get to feel how their spreads are. Get a feel of their platform. Get a feel of their slippage. Get a feel if how trading is before you invest, before you deposit money into it. Lisa, how did I get that screen? Right over here. Okay, so Hanko.com, and then right over here, trading platforms, and then there's your Act Trader. Okay, and then it will come up, and then this is what it kind of physically looks like, the back end. So I can pick whatever. Here's my watch list. If I want to trade Forex, got all my Forex pairs. If I want to trade indices, I have my NASDAQ, my US30s, I got my S&P, commodities, gold, silver, whatever I want to trade. Again, choose my security of choice. There's my candlesticks. I got volume profile. I can use all of my normal tools that I use when I trade. Okay, you know, I love to use, what do I love to use here? Let's see over here. Okay, like if you like to use Fibonacci tool, from maybe the low to the high, we can plot our fibs. We got our fibs. There's our our 0.5, our psychological zone. There's our 618. You know, like everything that you want to use is on here. But Lisa, the HankoTrade has live help as well to answer any of your questions. But guys, always open up a demo account, test it out, try it out, see if this is for you. The one thing that I love is, guys, I'm a mobile trader, as some of you guys know that, so I love trading off of my phone. This is desktop application, so I can only trade off of when I'm sitting at my computer with this, but eventually they will be getting a mobile version. So I'm waiting for that as well. But okay, guys, so gold is making a move. Okay, guys. Right over here, Lisa. Okay, that right over here. HankoTrade.com, and then under trading platforms should be Act Trader. Okay, if you click on it, then it will give you a little brief overview of what is Act Trade, or what it does, benefits. If you need to talk to someone, right over here, Summer Terry is waiting to answer any of your questions. And desktop. Oh, Lisa, sorry, it's getting late for me. Okay, guys, you can see it's getting late here. I gotta go to sleep now. It's getting really late over here. No doubles now. Now it's gonna be going straight to sleep. But guys, thank you guys so much. I hope you guys learned something about price action. Sorry we didn't get into some other charts, but tomorrow we'll do more charting. I just wanted you guys to really like get in depth with price action. Take your time with this, guys. You're not going to learn this stuff overnight. It takes time, but you will get it. I promise you. If you put the work in, it will pay off. Okay, trading rewards hard work, dedication, sacrifice. That's what it gets rewarded. Okay, I'm sorry to say this, but if you're lazy and you're not putting in the work, you're probably going to struggle in these markets. Okay, it's got to do a lot of hard work in order to get to, number one, to be profitable in these markets. It's not easy, and to do it consistently over time, it's a tough task. But take it day by day, slowly. Understand, again, like I said, it's putting the pieces of the puzzle together, and Once you put all these pieces together, it's going to start to make sense. And then little bit by little bit, you're going to start to gain confidence, experience, and you're going to know exactly what to look for every single day in these markets. Okay, some days are better than others. That's why you got to learn also when you further what is trending volume, what is consolidating, what is choppy volume. Tomorrow, okay, just trading tomorrow. We know that it's FOMC. Maybe tomorrow is a day to reduce your risk a little bit, because a lot of retail traders lose or blow up their accounts just because it's FOMC or NFP or CPI. You don't need to do that. The next day, there's no more FOMC. The volume might be normal again, good trading, and then you might over leverage. You might blow up an account tomorrow when you didn't even have to really trade FOMC. You could sit back, watch it. If there is a trade, take a smaller trade, but next day could be really good volume the day after. So don't go all in tomorrow, guys. Make sure you guys understand this. And for traders that are doing really well, if you had a good week last week, good 2 weeks, maybe yesterday you had a good day, don't risk everything all on FOMC and Powell tomorrow. This is not the casino, guys. It's not blackjack where we're doubling down on every single hand. Okay, this is trading, guys. Slowly but surely, little bit by little bit, compound effect. And you'll start to grow the account, start to grow confidence, and slowly, once that snowball starts rolling, it starts to get bigger and bigger and bigger. So just look up here. Has any green volume closed above this level? No, it came up, back down, came up, back down, came up, back down, came up, back down. Okay, so no green volume. But let's watch on the flip side on when it's coming down. It's coming down, back up, coming down, back up. So it's going to make a move. Gold is not going to sit inside here all night. Okay, so just look for that green volume to close above here. Maybe an impulse candle that's building. Okay, there's a time and place when to take impulse candles too, the way how they're building off the bottom. But also if we start to close down here, be careful, okay? Because I have this as a big green box. This is the low of the day, and it's building a higher low, higher low. So if it continues to build, maybe it will get that momentum to get up here and then make a move like that, okay? Maybe it doesn't happen. Who knows? Maybe it just continues inside here and maybe drop down, but maybe also look for that double bottom down here. Maybe this could be a good area to maybe initiate a buy in this green box, and maybe where this big block is waiting in the market. Okay, but right now still accumulating, still bullish. Maybe after the call, start breaking out of here. Okay. Lisa, how long does it take to set up your Bookmap? You can contact them. Like, they have support staff. They'll help you set it up. They have really good support at Bookmap. They'll help you set it up. Also, Bookmap has a good Discord group, Lisa, that they're very, very helpful in there. You can watch them live also on YouTube. They got educators too. But they're there to help you get it set up. You don't want to pay, Lisa, and not have it set up, okay? Because it's not cheap. Make sure you get it set up. Okay, guys. But thanks, everyone. Wow, it's getting late. Okay, so I appreciate everyone. Thank you guys for your time. Thank you guys for the likes. Thank you guys for the support. Appreciate all of you. Thank you, guys. And everybody, have a good night. If you're going to trade London, trade safe. There is a red folder. And especially tomorrow, 8:30 a.m. and more specifically 2 p.m. Eastern. Okay, 2 p.m. they release the numbers, and then 2:30, Mr. J. Powell, Papa Powell, comes to the podium. Okay. Thank you, everyone. Appreciate all of you guys. Have a good night. And tomorrow we'll have some fun again in Tokyo. Have a good night, everyone. Thank you.
Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, Here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.